Let's see. Volume down? Yeah, okay. Volume's down. All right, we're live. What's going on, everyone? All right, all right, all right. It is your brother African Emporium coming before you humbly today to do a quick little live video in relation to the futures market here. I'm sitting here, I'm pretty sure like you guys are that are kind of keeping one eye to the market and one eye on your favorite Sunday pastime, be it a movie or you might be at dinner with the wife or the husband or playing with the kids or some sporting events on TV, whatever it is. But I'm pretty sure you guys know, especially as traders, investors, we're always close to the market in some kind of value or function. And so again, had an interesting build today with my family over there at the DAG squad, and it's like, you know what, we're speaking a little bit, and this is how we ended the show, speaking about the market, well, just trading and investing as a whole. And it's like, well, with all this stuff that's happening in the market right now, all the uncertainty in the geopolitical scape, so to speak, where we have obviously China, they're kind of at odds right now with President Trump, in the White House. Pretty much their demands that they're trying to get out of this tariff or trade war negotiations. And so we already know the silver lining is obviously the IP value of it, intellectual property theft, that they have pretty much told China outright, no more, no more of that. You guys just been kind of leeching off our intellectual property for so long and capitalizing and making billions and billions of dollars off of it. And so with Trump last week Sunday, obviously putting forth the idea that hey, he's tired of this kind of long drawn out process where people are just kind of you know saying that at this point he's getting weak. He's obviously starting to cave to President X's little idea that they're not going to really budge on certain aspects of the plan, and so in terms of the intellectual aspect of it, what I'm saying. And so this is pretty much he's been backed into a corner, right? And he's been backed into a corner, and because of that, that tweet that he put out Sunday, that you know seemingly harmless in a lot of ways to a lot of people who understand geopolitics, but that was a very incendiary tweet where he pretty much came out and said, well, hey, this is a checkmate move I'm going to try to do to you guys and up the ante here. I kind of gave you guys, ever since, January, when I said, I may levy this extra, value of tariffs on you guys, I wasn't playing. you know, I kind of put it on ice, in hopes that we would kind of get to some kind of consensus in this, trade talks agreement. And you guys pretty much just kind of, played me, so to speak, strung this thing along. And a lot of that, probably has some meat to it, but ultimately, a lot of that negotiation was happening between, Lighthouser, Navarro, Kudlow, Mnuchin. They were kind of the ones spearheading a lot of the talks, back and forth with, the Chinese premier, right? The delegates that's dealing, in that perspective in terms of, those from Beijing. And so, funny as it is, now all of a sudden, people are, acting like the sky's falling, like the Chick-a-little syndrome, so to speak. Like, oh man, it's gonna get crazy, and but all the signs have been there all along, right? The signs have been there all along, where we knew at some point, those receipts, that were being, presented, were gonna have to come back around to the table. And so, basically, what we have today, which we knew was going to happen in relation to those tweets from last week, in terms of Trump, putting forth the idea that, hey, we finna up the ante. Um, Now definitively, since Thursday has passed, the deadline passed towards Friday midnight, that if they didn't have a conclusive agreement on what it's going to do for us, the tariffs, or in terms of the trade dispute overall, President Trump was going to go ahead and sign it into pretty much into practice, that they was going to raise those tariffs on China, right? An extra 250 billion, right? Extra 250 billion dollars. And so, again, if I just kind of add my little, value to it, up to date now, I think it's up to like roughly like what, 400 billion, somewhere around there, 400 or 500 billion dollars that America now is starting to actually siphon out of China in terms of this extra so-called quote unquote taxation. And so, you got to think about it from this perspective. And I know, I'm going to lay a premise real quick on both sides, the bullish thesis and also a bearish thesis. But ultimately, if you guys know your brother African Poor, I like to try to be balanced as much as possible. I'm trying to find a way where we all could meet in the middle so that way we stay psychologically sound and that way we don't let our emotions get ahead of us in this market, right? Because what you have here is where the market is basically, since the December lows, actually the day before Christmas, it seems, the market had that, incredible V-shaped reversal, you know, and ran 1,100 points off us in a matter of an hour, which has never been done in the history of the stock market. And then number two, the idea that the market from that point on, it climbed basically over 27% in terms of profit value, and in the SPY alone, off that, that so-called pump protection team or stimulus package that the White House unleashed, that they instantly later down the road called it a glitch, right? You don't have that kind of glitch, right? That's kind of like, us walking around in our respective neighborhoods, and one day a brink truck, carrying millions and millions of dollars just turn over, right? And the doors fly open, right? It's all unmarked bills, and the drivers, for lack of better terminology, something happened to them where they couldn't, identify any of us or whatever. Not that they died, but something happened, and then we just got all this free fall money out there, right? No one has to return it, right? No one's, kind of being in a position where they're going to be ousted if they was caught on camera. It's like, no, hey, here's this free money, right? That just pretty much doesn't happen every day. And so, in the same breath, that the market has rebounded, substantially off those December lows and skyrocketed. Everybody still has this so-called, again, delusions the grandeur how they still looking at the market as if it's not overbought, right? The analysts, number one, are always still saying, wait, no, there's still more room to the upside. What are you saying? No, every particular dip, let's buy it. And, again, to their case, somewhat so far they've been right. They've been right so far in some cases, because for every point where the market has moved up 3, 4, 5%, the pullbacks have been 0.7%, 0.8%, maybe 1%. And we're talking about on devastating news in the sense where if this was a catalyst in a normal market, this would kind of pause a lot of the bullish thesis, right? Where you would say, well, hold up, wait a minute, let me, calm down a little bit, or let me take a little bit off the table and let me prepare myself for what's coming next, or any substantial dips, right? Which obviously offer in a discount buy, right? We understand the market. It's kind of like, again, we know about supply and demand zones, right? Supply is when the banks pretty much seem like they've kind of gotten everything they can get out of an asset class, sector, whatever. And then at that point, this is their sell zone. And the demand zones are pretty much where everybody's kind of, trying to buy in at, right? We reconcile that to be in this relation to resistance and support levels, right? We always say what? Buy low, sell high, right? So you buy on support and you sell into resistance, right? Every time you have a meeting, notable resistance, go ahead and take your profit. Or the go of the rule of thumb, and if you already kind of calculated at least 30% to 50% of your profit in a trade, you want to take some off the table, right? Right. You don't want to be too greedy and allow yourself to kind of get caught out there, and now you turn around, and lose a lot of those gains that you already had, pretty much kind of in your hand, right? As we say, a bird in the hand beat one in the bush, right? And so, and knowing that sometimes emotions can cloud our judgment because we only see what, more value, more profit, right? And if there's no mainstream panic, we still what? We stay in the trade, or we stay invested, or we stay, for the long haul, trusting sort of, quote unquote, that, you know, the market's going to take care of itself because there's a lot of what? Major big forces behind the market, right? We got the big banks, we got the hedge funders in their little part, and again, we have the White House of all things, who has a very big vested interest to make sure the stock market never fails, right? Or in essence, to it doesn't have the kind of setbacks that kind of takes them off the growth, trajectory that they're trying to accomplish as a badge of honor that they've been able to kind of stimulate the market in a way where everybody's making money. And so when I look at the market from that perspective, I say, well, you know what? Well, again, we understand there's bulls and bears, right? There's ups and downs. So the tone that's coming out, obviously out of the White House, that's coming out of mainstream Wall Street, they're constantly, beating the horse at this point. And when I say beating the horse, it's like, they're beating the dead horse at this point, enough to the point where they're still saying, no, the market is still destined, to obviously eclipse 3,000. The pullbacks are going to be minor. Any dips that are formed, buy it up, right? Because we're not necessarily worried about inflation, which the Feds are now starting to come out and tell people that we're getting critical into some high inflation zones, right? We've seen several yield inversions happen. The 3 and the 5, I think I saw a 2 and a 7 or something like that. And several others too. I think it's been like 2 or 3 different yield inversions since December of 2018, or even probably a little bit before that. And typically, when you have yield inversions, that's a sign where, hey, it's time to kind of slow down a little bit, because again, the GDP in terms of the, all these different companies that we're trading, it's starting to kind of slow down a little bit, right? Some of them are cyclical, some of them are just natural aspects of how they're tied to the overall, global economy, right? Because again, y'all know the global economy is a well-cogged machine where everybody who, have ebb and flows in terms of what they're offering to the global market and how they're being prioritized and monetized, in their respective exchanges, right? And so again, we're seeing a lot of, you know, again, for what it is, a lot of this kind of negligence in essence, right? A lot of the talking points, the rhetoric, it's ongoing, just overly bullish, climatic kind of drama where they're telling you, hey, it's not that serious. It's not that serious. Don't panic. Don't again. Yeah, you never should panic. By all means, we teach that as well. We're big proponents of, hey, don't panic. Think clearly. Again, look at all the data. Check all the metrics. Go back and look at your charts. The whole nine is more than just one aspect of the market. Where I know some people will say, well, you know what? Hey, I don't even care about all that fundamental stuff. The callous, I just need to worry about what the charts say, and that's fine to then too. Because again, what works for somebody may not also work for the other. But where I, come in, I say, well, you know what? I'd rather be balanced on both sides as opposed to just being very, aggressive toward one side and one side only, right? Because there's so much that we're still learning about this market day over day, right? Again, that's why we study this market the way we do, or we study this craft the way that we do. For those who is that really, really, really take it serious and see the value in it, right? And so, again, segue into the conversation tonight, where we see that, or we saw coming up until that whole tariff deadline that was Friday midnight, that ultimately a lot of us knew that there was no deals going to come out of that. Right? It was just a whole lot of, let's kind of make it very climatic, and let's make it a lot of drama, and let's get the market kind of on pins and needles, which it was slightly. We saw a whole trading session on Wednesday where the market was just range bound, was literally no volume at all in the market. Right? The SPY was just very minimal volume. And literally the day before, we're talking about, it was like, like 100 something million shares traded in the SPY alone, just on the ideal that, well, hey, now there's an opportunity that they may just strike a deal after the somber market that we had that following Monday, or that Monday, so to speak, after that news broke with Trump, sending out that tweet. So the market obviously dropped. Sunday's future market, obviously previous Sunday, it dropped over 500 points in the futures market. Pre-market came in, people were like, oh man, here we go, right? And as soon as the market started showing signs where, like, oh, we might be a little, probably finna not have a nice little haircut, in come what? The banks, the pump protection team, they just start stimulating the market, and obviously that brought a lot of analysts, a lot of, big book creepers to the market, and they just started buying, buying, buying. The market just took off and pretty much erased the 500 point drop that happened in the futures market. Brought it all the way back to basically nothing. And so ended up pretty much near flat on the day in that kind of rally. And so, Tuesday, again, you had that same kind of energy, where the market was like, well, now we have a chance, possibly now that, we may end up getting a deal before these tariffs kick in, that Friday deadline. Well, again, we know we live in a speculative market where they're betting on, you know, that the news is always going to always be favorable towards the market. And that's the one side of this market where I tell people every day, be very cautious. All right. We all know about the famous quote that Warren Buffett puts out, right? When others are greedy, that's when you be fearful. Right? When everybody's fearful, that's when you be greedy. Well, that saying or that quote actually has merit in some aspects. But again, there's always a but or a caveat to that, because we know that the market does not deal in absolutes, right? The market does not deal in absolutes, right? Because we do know, if it was, if it was an exact science, so to speak, metaphysics, astrophysics, all these people who are just the brain children of the world that makes the world most easy to live in, they'll be billionaires and trillionaires, right? All this so-called quantitative education, right? They'll be running circles around the average, McDonald's worker, right? But that's just not the case. That's not the case, right? Because the market, again, when you think the market turn around and proves you wrong. Even when it's obviously wrong in the aspect of what the data says, it's going to do what it wanted to do, because we know it's moved on more than just the idea that a pattern or a trend or a fundamental cause alone will, have us believe, right? And so again, this is why. Okay, can you guys hear me? I'm sorry, someone said I'm getting an echo. Can you guys hear me clearly? I'm just looking in the chat now. I didn't have the screen up, but can you guys hear me clearly? All right. Check one, check two. Can you guys hear me clearly? Is it echoing? I don't know if you guys can hear me clearly. I'm just able to see the bad chat. I'm sorry. I was kind of in my little zone for a minute. Forgive me. Can you guys can hear me clearly? Okay, great, great. All right. Also, I just want to make sure. I want to make sure I come through clear. All right. Okay, okay. Thank you, brother. I didn't know. I want to make sure I'm good for everyone. Y'all know me. I'm trying to always work. Work for the people, so to speak. Work for the family. All right. All right. So again, and saying that again, saying all those things, this is why we have to be, again, like I said, very balanced in our approach, so we don't, again, become too myopic in our quest to make the market bend to our will, so to speak, right? Again, we've seen that a lot of times where, we're trying to position the market to kind of work for us. Uh, in ways that's kind of, outside the scope of how the market typically moves, right? So again, because there's bigger money out there, right? They're the bankers who really control a lot of, the price action of the market. And beyond the banks, we know that's a lot of that is also the algos, right? The algos have been laying waste to this market ever since the December lows, pretty much. Where again, that stimulus that came in, whether you call it the pump protection team, whatever, how they bought again the Dow Jones up over 1,100 points in a matter of an hour. I mean, we can go back and look at the chart. It's historical, how as that was. People didn't understand the gravity of how serious uh, that, the White House and many of these other big institutions globally has a vested interest in making sure that the U.S. markets, above all markets, don't necessarily fail, right? Not that it would just fall completely and we go into some kind of deep recession or big, the big market crash like we had back in 28, 2008, and the others back in the 90s. And we all know the historical context of when the market has had brutal crashes. But from our perspective, again, looking from the last one, because you can always only go off the last, major setback or or instance where we had an issue in the market was 2008, and we knew what caused that, right? But since then, again, the market has been on this unbelievable bull run. I think it's the longest in U.S. history where we've had this kind of bull run. Not that we haven't had major bull runs throughout the history of the market, but at this, growth trajectory in the market, where, I mean, you talk about stocks who are up, let's say since 2008, 2000 what, 19 now. Come on, you do the math on that, right? That's roughly about 11 years where we're seeing gains up, over 2,000%, 3,000%, 4,000+%. And we're talking about well-founded companies. We're not talking about little pump and dumps. Some of them 600%, 700%. Major gains, which is good, right? Because again, we're thinking long term, especially us, especially us out there to have long, saving portfolios, Roth, TSPs, mutual fund investments out there, your 401ks, all right, because that does you good when the market is obviously what, climbing at a nice rate. But so again, with even in that moment, again, there's a level also of everybody goes through it. There's a moment like, well, man, we good. I mean, it don't seem like we're ever going to have any major corrections, and so there's no panic here, right? But as day traders, we know that's totally different. It's totally different, right? Yeah, somebody putting the stat in the chat. Bank of America's up 700+% since 2009, right? And some markets out there, again, not to kind of compare the U.S. markets to these other emerging markets like Brazil or India. We all know the emerging markets, certain parts of Africa, this, that, and the third, where they're just now really starting to come online, obviously being accounted for in terms of the global market, in terms of what they're able to offer the global enterprise in terms of their goods and their services. Notwithstanding the fact that they're dealing with a whole new issues in terms of the foreign exchange, rate, which is obviously, we know there's a lot of questions behind that because they're not necessarily getting what they call fair trade value for their products and services. But again, they're still coming online to say, hey, we're going to work with what we got until we can make things better. And so, again, all the homegrown companies, what we call Team America companies, they're fat right now. They're fat on high on the hog. And yet there's still this level of complacency or entitlement that, they're up again, 1,000+%, 800%, 700+%, as if they lose, 20% or 15%. Oh, the world's coming to an end. And that's the aspect of the market where I'm like, how much more do you want? And some, again, emerging market companies, or quote unquote, which I hate to use terminology, third world countries, don't see they haven't seen 700% return on the stuff that they're providing to the world for us to utilize in well over 2 decades. Right? They're probably sitting at a 40%, 60%, and they're happy. They're like, man, okay, we're doing okay. And again, our companies are up 700+%. Again, I'm not dumping or swiping on that. I'm just saying this is the part where we have to be balanced as retail traders, because we'll get caught up in their data, right? Which necessarily doesn't really compute a lot of our pocket value in some cases, and act like, that's a win for the home team, but just because Bank of America or, Netflix or Amazon is up, 1,000+%. Again, we talk about people who had been definitely, ahead of the game back at the time and got in early, right? Because y'all know the market in terms of long-term investing, the long game is, set it and forget it, right? Get in early, right? Overcome your speculation fears and put your money where your mouth is at, right? Or so-called, in our aspect, put your money where your brain's at, right? Because we know that the market is what? Not a lazy man game. This is a brain computing power environment, right? Well, we can get lucky. We have them when we get lucky and find those little, quote unquote pump and dumps, and they run, hey, 15%, excuse me, not 15, like 150% in one day, or 200% in a day, 300+% in a day. And then we realize, okay, well, dang, we start thinking that that's natural, right? We start thinking that's natural. But ultimately, in that moment, you have to be smart enough to realize that, you take every trade like a grain of salt. You take every investment, as if, hey, you know, this is not my last investment, right? Excuse me. There's going to be other opportunities, right? As I'm always saying, I'm sure you guys have heard this saying too. It's a marathon. It's not a sprint. So you don't necessarily have to rush into a scenario where, again, because everybody else is excited and the FOMO pill is being passed around like the blue pill in the Matrix, right? I think that was the one that he took, right? The blue pill, the red pill. Y'all can correct me on that, right? But they pass around all these Matrix pills, and everybody just swallow them with no kind of recourse or understanding. So, well, hey, well, wait a minute, let me stop and think this thing through. Right. And again, we speaking strictly for those who are coming in, who are trying to put in a lot of dry powder into the market, or cash value, or excuse me, margin values at these kind of high exorbitant prices. That's the market that has it so frothy. And so they're coming in brand new out the gate. Oh, I'm going to go all in at the top. Like, whoa, we are still in the supply zone of the market. We're talking, just to be, clear on it, from the 280s to the 3,000. Obviously, we hadn't hit 3,000 quite yet, right? They're banking on it's going to happen, right? If they got anything to do with it, they're banking on we're going to hit 3,000 in the SPY, the SPY, the Standard & Poor's Index, right? 500, SP 500. But in the same breath, again, we still have to be cognizant of again, those moments where we have those pullbacks, right? What are some of the underlying factors that are out there that are causing this market to say, well, okay, let's collectively, reset ourselves a little bit before we, get a chance to make that next leg higher. And so again, if you guys looking at the headline that I have presented here tonight, where I'm saying, this is pretty much, hot off the blotter. This is hot off the press, so to speak. This is, you want to call it breaking news or whatever, which some of us smart folks in here, which you guys are smart, because that's why we over here, right? Right. This is why we invested in one another and also in this market, all right, because we're looking for what? Financial freedom and opportunity and gains, like the next so-called investment banker is. Right, the people that has benefited for years out the opportunity to have accredited license to make all the money, right? So now we're like, oh, we got hip to the game, right? Right? Y'all don't let the wrong people in the door, so to speak. And so we're a unique blend of people from all walks of life, and we're starting to see now that hey, there's more ways to kind of get to this so-called promised land or this financial freedom like uh, you know uh, fantasy world that they presented to us that we need to go work for somebody else to get it that way, right? We know that's like no, that's the slave labor way. We also want to be able to use the best thing that we have for us is what? Brain power, and not just our backs and knees and elbows, right? Right, so that's why we also see the value of investing in trading. And so again, kind of bringing that back full circle into the things that we're watching for day over day, which is obviously current events, is a major force or a factor in terms of what we do. Just being able to kind of keep up what's going on around the world, where we know it matters in terms of what? Dollars and cents, right? And so tonight, which we knew, the Sunday, because obviously we already knew that the Chinese were going to retaliate. For some of you guys, you know, who've been kind of keeping up with the kind of, the soap opera drama of China and Trump, right? Right. That need to be like a boxing headline or something like that, right? China and Trump, and so now, going into again to this weekend where we know the Chinese were going to retaliate or come with some kind of form of, uh, you know, uh, 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 you know, uh, I would say pushback against those 250 billion that was also now enacted and levied into policy now against them. They have to save face now, right? Because now they're looking at like, okay, well, man, what are y'all gonna do now? It's kind of like when those scenario when you see two kids at the playground. We all been there. Y'all know what it's like, right? You got two kids getting ready to kind of knuckle up, and there's one guy or one woman in the middle instigating everything, and she's kind of like the moderator, the mediator, right? And it's like, some of y'all old school folks, I'm going to go with you like, baddest man hit my hand first, right? That means that's the baddest person that's in the fight. And so what Trump did, Trump slapped first, like, hey, I'm the baddest man in this, right? But it would seem that America have more to lose than we have to gain going through this tariff trade war. And there's people on the flip side saying, whoa, wait a minute. China has more to lose, right? Right? Because they need our economy. They need our markets, right? We have the most lucrative market on the planet is the NYSE, right? We're talking about trillions of dollars that is flushed through the NYSE on the daily. I think I got a stat chart up. I presented to you guys, especially some of you guys that went through my investment training course a little bit, where I presented a while back about the kind of money that is moved through the NYSE on a daily basis, and the kind of money is generated over one fiscal year. We're talking trillions of dollars, a lot of money. The NASDAQ is number two, right? The amount of money that's moved through the NASDAQ on a fiscal value. And so we see that people want to come here not only to live in the so-called land of prosperity, but also get tapped into our markets because they're very lucrative. And so they can take a trade, like or the RBE that ran, well over 300-400% recently, or FOUN, a lot of others. We've all traded them, and they can utilize being able to trade our markets and capitalize on that kind of gain value, and then obviously rotate that money back under the exchange, value, and make a killing, right? Right, they're getting paid under that aspect, if they privy to be able to trade our markets. Because again, we know that the USD dollar, based that to the British pound, are two like the most highest benchmark, currencies on the planet, right? And then China's kind of not too far behind because we already know at this point that China, as a whole, based per the data, by I think they say by 2025, China's going to be the world's biggest superpower in terms of their economic value in terms of the GDP. So again, of course, American bankers are hesitant and they're paused, and some of them are downright scared of that. Having have reigned so long in that department. Again, this is not me for or against any one of them. I'm just speaking strictly on the data, strictly on the data. And what does that tell us as investors? Why we're comfortable in knowing that we're here to uh, you know stay strictly disciplined to the data, no more, no less. Now there's patriotism in investing too. I get it. Right? Some people, man, ain't gonna invest in them Chinese companies. If it's made in America, hey, I'm putting my money in made in America. Right. So again, GM, Ford, y'all know some of them companies out there. I'm going somewhere with this. There's a method of my madness. Apple, Boeing, and turn sideways on that, right? Because again, these are the so-called too big to fail realities where it's in America's best interest to make sure that these companies reign supreme in terms of their stature over all the other different economies around the planet. And so dealing with this trade war, this tariff debacle, so to speak, again, whether it's needed or not, there's going to be arguments on both sides. Myself personally, again, I try to be balanced as much as possible. I do know that just by basic economics and understanding how supply work in terms of services and goods. Okay, yeah, America have they've been taking it on the chin because they just been so eager to get in all these different markets where basically at the end of the day, the American citizen or the resident or the taxpayer or even the investor, we're eating a lot of costs from these other countries because we're too busy to get, too eager to get into their markets where a lot of the money that we're paying premiums on, these people are paying peanuts on the dollars on, and also in relation to their economies, their currency rates, right? Because we know over here we're used to being fleeced, right? This is Rome 2.0. Let's not get it twisted. Whether you for or you against, we're Rome 2.0, right? Taxation, right? Oh, I mean taxation. Everything comes at a form of a taxation, and they're trying to find ways to get more. Right, the same way we saw, when the oil market went, belly up, and I say belly up because they were trying to, barrels of oil almost like $100 a barrel, dang near. Gas prices were like, like through the roof. Y'all know we went through it. Obviously that was, in direct correlation to what happened in terms of what that war, right? The so-called Iraqi war scenario, and how that thinned out a lot of the GDP in this country. Cause y'all know, wars obviously bring on recessions. Wars are very, very detrimental, and again, thinning out, a country's, ability to kind of go through the natural progression in business, and because it's a pause reality. It's like no, all money's not getting sucked and pumped into what defense now, right? Because now it's like, oh, I'm fearing for my safety now, right? So of course, people just by proxy of that, they're going to side with the government much as possible, even though they're going to be naysayers. And again, balanced people understand that, but they're going to say, you know what, I'm going to throw caution to the wind. Yeah, I understand we need the money to support the troops, right? Nobody want to be against not supporting the troops, yeah, right, right. Because now it's looking like you like, man, how you gonna be against the troops, right? But sometimes people fail to realize you just against the fact that we shouldn't even be here in the beginning, and people miss that. They'll miss that and try to blame or say that you're not this, you're not that. Again, I'm just kind of laying the thesis, the different arguments or contrarian views or for views that I've seen, thus being an investor or trader in this market. So again, so that brings you back full circle to what we're realizing now. With now, this is kind of like what they consider to be a Cold War, right? This is a Cold War. Basically, we are in a Cold War. They pretty much outline every aspect or data or metric to the T to let us know that we are actually in a Cold War, excuse me, without actually saying it. I've seen maybe a few little handful of pundits or analysts actually go on and say it, right? But for the most part, your major news publications like CNBC or Fox Business and all these other Bloomberg, this, that, and the third, Reuters, they're very, very hush us on really calling a Cold War. But what we've seen in the market is that since basically the first half of 2018, when the market really started showing, actually, to be honest, the first quarter of 2018, when we started seeing those telltale signs that those tariffs are serious, situations starting to get serious, and I started seeing it in terms of a lot of these S4 filings or company filings that they're putting out in terms of their growth. I started seeing a lot of guidance, their guidance, different fiscal quarterly guidance start being reduced. And I'm like, okay, what's this all about? So I guess these tariffs are serious. They're starting to affect these companies. Case in point, a company like Whirlpool, right? The first major catalyst value that really, I guess, damaged some of the U.S. based companies was what? The whole steel and aluminum, right? Alcoa, Whirlpool, U.S. Steel. Y'all know some of these aluminum and steel companies. They were the first Caterpillar, right? Again, we talk about heavy metal here, right? Getting taxed hard by the Chinese when they retaliate. They level of retaliation, right? The farmers, again, a lot of crop spoiling, right, in fields because the Chinese, put a clamp on receiving these goods into their port systems as a kind of pushback against Trump. They was like, no, we'll go elsewhere and buy our goods, right? We know that America. I didn't even notice that until I actually, and it's funny because I actually study, health and wellness or whatever. But America is the world's largest soybean producer. It made sense to me later when I started doing it, the recon data research into it. But America is the world's largest soybean producer. Let that marinate, right? For all you edamame eaters out there, your tofu and you like your little favorite little little soy burgers and this, that, and the third. Again, a lot of that is produced under the again the American soil content. But we know the people who eat soy the most, you would from what we've seen, is Asians, right? They're a big proponent of soy, right? Everything is soy with them. Soy this, tofu, this, that, third, alternative source to so-called protein or whatever, right? And so again, knowing that, I was like, man, this is kind of weird here, right? So you're looking at the soybean market from the commodity standpoint. You see that they were going through a lot of what, hiccups. They were getting hit hard. And then on top of that, like I said, these steel companies, U.S. Steel, Alcoa, and there's many others too. Y'all can go pull them up. Again, we literate over here when it comes to the market, so we understand what I'm talking about. And so again, here we are now. Let's fast forward roughly what, 1, 2, 3, maybe 6, fiscal quarter reporting periods later. It's all starting to come into fruition, right? Back in January, or I want to say January or February, that's when Apple came forward and pretty much came out before the world and said, "Hey, I just want to let you guys know we are finna be in some major trouble. We're lowering our guidance substantially because we didn't really factor in, the true nature of how these tariffs are starting to affect our company." Right? We already know about the whole the semi-war situation that was happening between, in Taiwan, right? The whole debacle with the Taiwan issue, because obviously that's the world's largest producer of semiconductors, right? They have a lot of dedicated factories in Taiwan that produce a lot of these microchips, right? For these smartphones, your cell phone, computers, any kind of computing value that's dependent upon microchips. A lot of that stuff is coming out of Taiwan, right? And so obviously it's in America's best interest to make sure they keep that kind of pipeline open, because we don't have the kind of capacity or the U.S. manufacturers to produce these kind of things that, again, a lot of these American-based companies that are American ran, they're outsourced. They outsource a lot of their technology, their intellectual property to these same, quote unquote, so-called third world countries like Taiwan to produce their goods. Because you see where I'm going there, right? It's like you can't have it both ways. You can't have it, you know, your cake and eat it too, then cry later that you end up getting, ulcer in your stomach or a cavity, right? You can't have it both ways. So you're worried about China stealing intellectual property, but at the same time, you're contracting a lot of your work into China to produce your goods. You got to get in the blueprints and the schematics to a degree so they can what? Replicate your item that you're trying to get them to make. The same way with Taiwan. Taiwan is still a product of Asian community. Whether they're part of the Chinese Republic or not, they're still a part of that community. I mean, y'all get my point. See where I'm going here, right? So hence, that's why you got this issue with China saying, well, hey, you know what? Yeah, I know you're banging on us right now. You want us to kind of give up, and just say outright, we're not going to be able to, capitalize on intellectual property, you know, or replicate what you guys are doing in our own right to build up our economy as well, because we know we're in direct competition with you guys in America at this point by being the number one, uh, growing economy on the planet now. Well, we're not necessarily comfortable in this saying outright, we're going to give that up. And that's basically what's happening. Let's call it what it is. Let's not, again, quote unquote, pussyfoot around what's the reality of this kind of trade war tariff thing. The underlying thing that's really got them at odds or impasse, so to speak, or impasse, is the idea of the what, intellectual property thing. But in the same breath, you got a company like Tesla, right? That again, Tesla has its cult following. Don't y'all get me started with Tesla. Y'all know I am when it comes to Tesla. But you have a genius, and even Elon Musk, even though I go hard against him every day for being a silly behind crazy clown like CEO, because he can't see and understand it as a publicly traded company. You still need to run your company with the respectability that you got people invested money in your company, and you need to carry yourself as such. I'm not saying you have to bow to the will of what everybody says, but you're hurting the stock price because you can't focus on doing what your genius is and making sure you scale your cars or your vehicles up to the level where, hey, they are the number one competitive, EV vehicle on the market to fix a lot of the problems that they're having. You're too busy trying to fight, general consensus, contrarian views, short sellers, and sending people to the Mars in a roadster, uh, uh, making flamethrowers just to have a novelty item. Say, hey, I invented a flamethrower. Y'all know all the stuff out there on that. But I'm saying, in relation to this gigafactory that's going to be built in Shanghai, right? They're building a gigafactory in Shanghai to also help replicate what their technology in terms of the lithium batteries, right? The batteries that they use, this proprietary uh, um, blueprint of their batteries that Tesla has that other companies don't have yet, right? But they're gonna produce that in China. Let me say that slowly. They're producing that in China or what Shanghai? Where's Shanghai at? China or Japan? I might be off. Y'all know what I'm saying, right? And so they're giving the schematics and the blueprints in a lot of ways to the same very people who the White House and pundits alike have an issue with. You've outsourced so much in this country to the tune where you really pretty much dealt your own death blow. It's like a boomerang dagger, right? We call it, and y'all know it for me with the dagger squad. A boomerang, boomerang daggered yourself. You've allowed too much, too many people to be comfortable receiving your intellectual property, so to speak, and now they found ways to replicate it. We know that the Chinese market, right? Again, let's take Nike for instance, right? Where are Nikes made? Where's the Nike shoe made? Right, one of the biggest sports retail shoe manufacturers or companies on the planet is Nike, right? Right, they're warring back and forth with Adidas. They've been coming, going back each other, left and right lately. But again, Nikes are produced right where? In China. Okay, the black market takes that sketch, blueprint or whatever intellectual property, replicates those same shoes, and somewhat in a lot of ways outsell. They outsell they their Nike self, itself on the black market than they actually do inside these, retail stores like Foot Locker, Champs, this, that, and the third. So it saturates the market. Again, we know it's not the quality. Let's not get it twisted. We know it's not the same quality, uh, you know, as again, you know, excuse me, guys, sorry about that. As what the actual quality control is given from or given through the Nike headquarters when they put these shoe on the market, when they go through the rigorous testing to make sure it's of the quality. But these people have their stuff, right? So they are able to benefit off Nike's again ability to want to come to market by going through what their stuff, their factories, or them being the manufacturers of the product. They didn't design it, but they are the manufacturers. You see what I'm saying? Right? They call them fakes fakes and second copy in India. And so again, I'm painting a picture here. I know y'all walking with your brother. Be a little patient. I appreciate you guys hanging out with me. On this Sunday, and we talk about the futures market, right? Matter of fact, let me just go and share my screen on the future market while we're talking, so we can see this in real time, right? We can see what the futures market is going to, doing actually right now, which I was already kind of, telling, a lot of people who are around me or whatever, hey, be ready, right? This weekend going to be a bombshell. I was telling people that, throughout the midweek, especially after the tariffs kicked in Friday midnight, the extra 250 billion. I said, China's going to retaliate, or is there going to be some kind of big, economic blowback in the White House where they're going to probably start infighting. We saw it before at one point where Kudlow and Mnuchin was not on the same page, and Navarro and Lighthizer was thinking something different, and Pompeo was speaking something else, and Trump was saying, "Hey, I told y'all to do this." We've seen that before. All right, and this is on the thick of all the investigation with the Robert Mueller FBI report on collusion. All this stuff was happening. Again, there's a lot of happening around us that we were just trying to digest, and how that affects the market. And so now that all this stuff is somewhat coming to fruition in certain aspects of those different drama plots. Now, again, the elephant is in the room is what we kind of started with that have gotten us in the first place, got us to this point in the first place, right? It's these tariffs, this tariff war. Ever since the NAFTA agreement got pretty much dismantled by Trump, and the whole TPP reality, we're seeing again a somewhat scratch this entire blueprint, ball it up, throw it in the trash, and let's kind of start over kind of reality. Because again, whether you for or you're against, we see that there's moments where, again, us as the quote unquote American taxpayer has been paying a premium for a lot of other things where people have benefited off the intellectual property of these so-called American companies have been able to present, and they're using it against this country. But again, it's pretty much as if now we have no choice. And I say we, meaning the global community in terms of American side of the house, have no choice because they've outsourced everything, right? All bank and telemarketers, all these different people, they're in India. They're stationed in India. They're not like some call center in Minneapolis somewhere, or down in Florida or Oklahoma somewhere. They're in India. Our person, people that can kind of really barely speak real good fluent English. These people are answering the phone. Hello, how no disrespect to them, because that's my family too. In terms of we all deal in that reality in terms of the global market. When I say that, I mean family, we're a global market. So they're just trying to get in where they can fit in too and benefit off that. Because again, if they're saying that American workers don't want to do that kind of work, and by proxy that we're just gonna go outsource and send it somewhere else because it's cheaper to pay that that kind of labor. Well, again, you can't have your cake and eat it too and complain, because now you have the same thing down happening in Mexico, where the labor is pretty much dirt cheap, and they're willing to make these goods and services, and do the kind of job that American people, quote unquote, just won't do. So again, the Mexican ain't probably just mass producing and replicating a lot of the things that America, is presenting to them, because again, they too close to them to kind of really get away with. Although there are some things that they're able to do and steal that property too and do their own, but it's not at the level of a China or India or whatever the case like that. And so when other presidents had a chance to kind of rectify at a point where they really began to expand a lot of this global growth into these emerging markets, quote unquote emerging markets, they didn't do anything about it. It just festered and it got worse. And then they passed that tax on to who? You and me. Let that marinate. They've been doing that for years. They found a way to push the American taxpayer to the brink of dang near losing it all, and taxing ever so minuscule in a way where again it just started compounding, right? The whole thing that we invest for is what? Compounding interest, right? They tease us that they say the compounding interest is pretty much what? The eighth wonder of the world, right? Right? Because people don't realize the power of compounding interest, principal application, obviously, dollar cost averaging, and then allowing the gains to kind of keep turning over on top of that every time you come you averaging in. Compounding interest was the only math algorithm that stumped Albert Einstein, quote unquote, under his words. Right? It's a magical value how money turns over quick once it begins to aggregate. You see what I'm saying? So again, we're right back in that same boat in a ways where we're getting tested by the value where the people who are quote unquote in control of a lot of the governmental faculties to obviously give you and I the best opportunity to live quote unquote our best environment or best life quote unquote uh, are not necessarily catered to the ideal of the individual. They're concerned about you know is there a bigger buck to be made on the back end. So again, we can make give me come in under the tax radar and not get charged as much to manufacture goods and wealth, then so be it. We don't care about American jobs like that, because then they'll turn around and cry, well, man, we can't, we don't want to pay the American workers, give them fair wage to live in, because every year the cost of living goes up. Every year the cost of living goes up. I've never seen one stagnant period in American history since I've been born where the cost of living actually declined from one year over the next, because the market was slowing down or GDP was slowing down in the over value of the market as a whole, meaning the global market, American market, in relation to its peers. And if there is, someone point me to that data. I've only seen it constantly inclining. The way we want our stocks to do, right? When we're going long, but that's not the reality of things when it comes to again, uh, you know, what we're obviously having to deal with as the person that's working and going through all these different rigmaroles to try to make sure we be able to provide for our families. And so they got us thinking one way, yet they're doing something else, totally different. But aha, right? Like the old man on Coming to America, right? The little old guy, the Jewish guy. Rocky Marciano. Y'all know I'm talking about that guy. We get a chance to see it from a different perspective. Now, because we're more intertwined into the overall market as a whole, we're starting to see a lot of these things that we were probably oblivious to before. We're getting a chance to see the data. We're getting a chance to read the filings. We're getting a chance to kind of assess the market overall because that's a part of our natural homework, right? Our natural due diligence. And so we're not being, kind of brainwashed under the idea that just because we said it, it is true. That kind of mentality, right? Like you just trust everything that the government tells you, right? Without any natural research that you should do on your own, which is obviously detrimental to your well-being if you give that much power to another individual over your entire life. That's problematic. Again, I'm not saying don't trust who you want. I'm just saying do your own research, do your own due diligence, right? Y'all know my two favorite little words too: due diligence and discipline, right? I'm constantly stressing due diligence and discipline. It's better to know than to just believe your way through a lot of things, right? As I got one of my famous quotes sitting right here. I see it every day. Knowledge cancels out belief. I own that. I live by that much as possible. Much as possible. Not that I can't be wrong, but knowledge does cancel out belief, and it's better to know than to guess. Now, even though we deal with a speculative market in a lot of ways, even though you're right in your thesis because you've done all the research, the homework, you're on point, and you go into that trade saying, "Hey, I'm on point. This is the most relevant data. This is what everything is showing me. This is what the PE is saying. This is what this saying. This is what the chart is saying. This stock should do this when they open the market." And then what happens? It does everything except what you thought it was going to do. Like, how's this possible? You know? But again, in that moment, again, cancel out the emotion. Understand, again, you can't compete with bankers' money, right? Cut your losses quick, readjust yourself, get back in the trade in the right way that can help you benefit, so that way you can get some of that money back or get to the bag, right? So again, I'm just saying it's just incumbent of us that we're always again realizing, you know, what's going on out there. So we don't get caught out there stuck holding quote unquote the bag, right? We don't want to get caught holding the bag, right? We know how that goes, right? So again, it's just like I was saying before, it's in our best interest, right? It's in our best interest that we keep up with everything that's happening around us as much as possible, right? And this is just another factor or aspect of that. And so, reading the headline tonight, which is you guys can see in my description box, that's pretty much tonight's headline, right? The futures market when it opened up, you know, that's pretty much the headline, right? Pretty much that what China defiant toward U.S. on trade. Kudlow urged a strong enforcement step. Kudlow and Trump is secretly warring right now. One have gotten ahead of the other. One is in control, in control of the overall, uh, uh, narrative of what they want, how they want things to go. But they're getting ahead of each other because they're too busy trying to focus on, the stock market and the stock market alone to the tune where they're trying to appease investors. Their so-called in-crowd crews who are benefiting off this, the tax rates and all these different things. We know about the whole tax rate and this new tax policy that came out obviously under Trump, whether you for or against it. But since they came out and people have done their first W-2s underneath Trump's reality, right? When his plan actually went into implementation, we're saying that there's some big discrepancies with that tax rate policy. That it turned out to be what everybody was kind of somewhat skeptical about. That it also, it's helping the 1% more than it is helping the so-called middle class, and obviously definitely the poor class, right? Which they're trying to do with that altogether. They're just trying to make it, the middle class. They're trying to make it just straight, outright seemingly, the 1% and everybody else, that kind of reality, right? As if there's no level to this, like we know it to be, right? So again, we're in that space now where this is the part of the market, and I guess I'm premising all that to say this is the part of the market where we have to be very, 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 very careful, right? Very, very careful. And I'm speaking strictly for a lot of time. A lot of this too is the long-term investment too. But again, even if you're a day trader, you still fall within that criteria because what you're expecting the market to do, right, from one day over the next, or what you're perceiving it to be to do based upon the data came from yesterday, that's not the case. And at some point, we can actually use to quantify that, to a degree. Now you can't. because again, algos are running amok. The White House is running amok. This whole, the press, they're having a field day with all this news because they're looking for rating as opposed to balance and reality in terms of good information to help people become knowledgeable on what's happening in and around them, and they're really hard earned money. That stuff, fair and balanced journalism is probably lost forever at this point. If y'all think different, I would love to hear y'all opinion on that. But what we consider to be real, fair, and balanced journalism, I think that stuff left with what Dan Rather, them guys back in that day, even if it was back then. But I think them days over with. Again, that's just my opinion, though. That's just my opinion. Again, like Cat Williams would say, that's where I get my hair done at, right, so to speak. But I just don't see it. So again, we're having to kind of cipher through all this stuff on our own, right? We have to cipher through all this stuff on our own and make important decisions that's going to be good again for our household. So again, real quick, let me run over to the future market real quick, and I'm not going to drag this on, but again, I do appreciate you guys stopping by, hanging out with your brother African Emporium on this Sunday to discuss the things that obviously move our bottom line as investors or traders. I think this conversation is very much needed. And we need to also make sure that we're always protecting each other too. Again, as I'm always saying, this is a think tank. We are a think tank in our own right. The same way hedge funders get together and hang out with each other on the weekends, and market makers get together and hang out with each other on the weekends, and banks get together and hang out on the weekends. Well, guess what? This is our form of hanging out on the weekends, right? Because they have a special interest because they are in a certain pool of a thought process that obviously benefits them. Right. As I've always said a million times, if you guys have heard me speak, there's no such thing as permanent friends. There's only permanent interest. Right. There has to be an interest for us to come together. The same reason you guys allotted me this little bit of time here, and I'm so humbled and grateful for that you hanging out with your brother a little bit here to kind of have this discussion. We have an interest, right? We have a permanent interest at this moment, even if it changes tomorrow. But at this moment, we have a permanent interest. That's to find ways to get to the bag, help each other get to the bag, share data information to kind of improve us having the ability to even get to the bag. And so that's why I say we need to be on point much as possible, much as we possibly can, humanly possibly can, to make sure we don't leave no stones unturned when we're trying to unpack, decipher this market, this geopolitical landscape, and then go forward and make good decisions from that point forward. And so again, tonight we got the futures market. As we say in the investing world, somebody wetting the bed. Somebody's wetting the bed tonight. Y'all know they use better, adjectives than what I like to use. There are other adjectives that are using when we make that kind of statement. But somebody wetting the bed tonight, and this is after a market that rallied Friday, a market that rallied into the close. Even when they came out and said, "Hey, Friday midnight, we're gonna raise that 250 billion." Instantly on that kind of level of news and information, the market should have sold off, right? Y'all know the whole slang, right? The phrase we all live by. What's that phrase we all live by, guys? Let me see if everybody in the back chat kind of hanging out, right? We say what? What's the ultimate phrase that we live by every single day as investors or traders? We do what? We always what? What we do? What do we do to the rumor? We do what to the rumor? Let me see if everybody kind of hang out with your brother a little bit. I ain't gonna drag this on, but we do what to the rumor? As an investor, we do what to the rumor? Let me see if somebody got me in the back chat here. We do what to the rumor? What do we do to the rumor? When we hear a rumor, what do we do in the stock market? Right? Let me see if somebody got me in the back chat here. What do we do to the rumor? Again, it's cheesy, but we understand here. 100% right. There we go, brother Mazel. Right? All right. We buy the rumor. Right? We buy the rumor. We sell the news, and we wash, rinse, repeat. We were taught that, quote unquote, religiously when we first got started in the game of trading and investing. Everybody around us kept telling you, "Hey, just live by this principle here and you'll be all right." Right? Hey, buy the rumor, sell the news, wash, rinse, repeat. That's pretty much our religion. Right? Everybody got their own specific, religion. But as investors or traders, our so-called commandment, so to speak, quote unquote, right? Right? Is the three commandments, the three commandments of the trader. Buy the rumor, sell the news, wash, rinse, repeat. We can say wash, rinse, repeat is all one, right? Whatever. Unless you want to say it's three of them, right? Whatever. So the three commandments as an investor trader is buy the rumor, sell the news, watch them speak. That's kind of like don't die, thou shalt kill, thou shalt not covet somebody else's wife, or and then y'all come up with another one. But these are very serious things that we live by. Now, whether we follow them every single day, from a very disciplinary disposition, that's up to the individual trader. But we do know the market somewhat folds and bends to the will of that mantra. So when you have a scenario where the market hit, or the 250 billion hit the market Friday midnight, because everybody was already in the rumor speculation up into it, because that's why the market rallied off the 500-point drop they had that previous Sunday, and then the market kind of somewhat rebounded a little bit, even though it had some dips, in between Monday, then Tuesday, then Wednesday came back. People are kind of still kind of say, I'm about to dip. I don't believe that Trump gonna leave us out there like that. That's what we kept hearing from the pundits, did we not? Everybody on CNBC, oh, they're gonna get a deal. They're gonna have a deal. Oh, Trump's not gonna allow the economy to fold. All this great growth we just had since the December lows to be just go into shambles because they have some small differences of opinions. Like, no, Trump understand now that he can get a bag just by from a pen stroke. He can get a bag just by a pen stroke by saying, hey, okay, I'm able to get 200 billion about these jokers, and they ain't had to do nothing but just put in the so-called in the books in the legislation that, hey, we're gonna levy these tariffs against y'all, this 10%, and he already got like a 200 billion bag off that the Chinese government, which obviously in relation is passed off to their people having to pay for this. They have to pay for that. It ain't the Chinese government alone. Now the Chinese government can stimulate the market too and pump fiat currency to it like they've been doing. We know China been hitting that throttle button on the fiat currency pump like no other country ever under this whole tariff trade war. I mean, that's per data, right? And so again, America has a moment of doing it too. Again, December low, December 24th to be exact, 1,100 points, and then in a matter of an hour, the market went up over 1,100 points in a matter of dang near an hour. That's unheard of. That's unheard of, and they liken it to a glitch. Like, seriously, that's not a kind of glitch. No, bro, no, bro, no. And so again, going back to the scenario here, where again, I'm supposed to be showing the screen, right? Let me show the futures market. I guess I'm in my moment now. Forgive you, brother. But again, I'm gonna share this here. I ain't gonna be too long. Take up you guys' time. I do appreciate you guys hanging out with your brother after the forum on this wonderful Sunday, getting ready for this market. Because I know y'all guys just like me. Y'all know Sundays is like pre-game prep. Like, we sitting there hanging out with the family, having fun. We watching the game, but every now and then we looking at our phone. We trying to think about this trade we're gonna take coming up Monday, because y'all know, never in the history of the idea of Mondays ever been relevant to people until we became investors or traders, pretty much, because we can't wait for Mondays, right? The average worker out there that work for Mr. Charlie, right? Mondays, they're dreading that. They're like, man, this weekend could be another day longer. Man, I don't want to get up tomorrow, go to bed with that. Some of us still do. Again, no disrespect, but y'all know what I'm saying. But at least if you still are working for somebody else and you have this craft also on top of what you do, aha, right? We got a little something extra. Right, we got some fallback a little bit, or we have at least a skill set that can translate into what you consider to be, instant money, so to speak. Even though we got to wait for it trying to move through the bank and all that, but again, we have a lot more than a lot of other people who don't have this skill set that they have to deal with, right? Because we can say, well, you know what? Okay, we off today because we shut down because some natural disaster happened or whatever, and I can't go to work. I'm not on salary. Every day I can't clock in, I'm losing money. All right, these bills ain't gonna stop. They don't shut down the bill collector when the natural disaster happens. Someone prove me wrong. Every now and then they'll do a cause emergency where they may put a pause on it, right? But most times they don't stop the bill steals from rolling up, and those bills from constantly aggregating. Now, why is that? Right? There ain't no stimulus when it comes to that. They know, hey, that just happened, man. They deal with it. That kind of mentality. That's what they do. They deal with it. Other countries out there, they go to war for their people. Like, no, we got it. We'll handle it. The government got you. But again, America is so scared to do something nice for its people, besides giving them a football game, basketball game, a baseball game, a golf match, or or a so-called holiday where you get a day off, they're afraid to do any more than that because anything more than that, they would be considered to be what? Socialist. Oh, you're socialism. Oh, they that's like slapping somebody's mama or grandmama. Man, you slap my grandmama using that socialist word, man. You better get out with that. And they fail to realize there's a balance between both capitalism and socialism. But again, another conversation for another day. I'm just painting the picture. Walk with your brother for a second. Don't turn up on me and say I'm a socialist because I'm not. I'm speaking. There's balance to everything. There's balance to everything. In most cases, there's a balance to everything. And so again, they're not going to really give us that kind of leeway to have that kind of level of comfort in knowing that they're really going to have your back when times get rough, right? And I'm going somewhere. In that same breath, the way that the U.S. farmers are about to get hit with the retaliation from China, because like I said earlier, that the USA is the biggest exporter of soybean. They're the biggest world's exporter of soybean, not just to China, but Europe and a lot of other countries. The nations out there buy the soybeans from America farmers. So soybean, some of the corn crops, soybean gonna get hit hardest, right? Because again, China's the biggest buyer of it. But what is that gonna do to the farmers if they can't move those crops? What is it gonna do to those silos filled to the rim with soy, right? And they can't move them before they start what? Breaking down and perishing. What is that gonna do? Again, I just want to, put that out there. I mean, I know y'all intelligent enough to realize what's happening here, but what is that gonna do to them? Just let that marinate for a moment. Right? I'll make a little jokey joke again, and then no disrespect to the farmers out there. What happens to soybean when you ferment soybean? It turns to what? Right? What is fermented soybean? Fermented soybean makes what item that a lot of people utilize today, especially if you go to your favorite little Asian restaurant or your little, whatever, your little Japanese restaurant. What is their staple little item that they have on every table, right? I guess I'm testing y'all from a culinary aspect, right? I got a little culinary diploma too, right? That's part of my little regimen. But what does fermented soybean turn to, right? I'm again having a little joke moment here, right? Let me see if somebody paying attention to the back chat. Right? We going in a little bit. 100%. There you go, Eva Monica. She on. There you go, family CG3. Y'all on it, right? Soy sauce, right? They're gonna have again. I ain't cracking fun and making jokes here, right? But that's what they finna have a silos full of what? Soy sauce. Again, y'all get what I'm saying. Take more to it, but that's what it was. These fermented soybean when they go under, because they can't move it. So they spent their entire growth season growing this product, and that may be their stable crop that they grow throughout the year too. Again, from that aggregate aspect of agriculture, this is their cash crop, right? We've all heard the term cash crop, and certain farmers benefit off certain cash crops over other because they know that market is even sometimes a little bit more lucrative than other aspects of things that they grow, in between the season, so to speak. I mean, y'all know this stuff go. Y'all been through, back countries of America and Pennsylvania and the South, and certain seasons you see, big long stalks of corn growing. Then other seasons you see small little bush like little crops. You like, man, is that peanuts or is that soy or what is that? But there's rows, manicured rows of this little, bush little plant all over the place. And so you start thinking about, okay, from a commodities export, what is the biggest, exported commodities that America produces? That ain't hard data to figure out. I mean, this is easy information we can research and figure out what's moving outside these ports from the commodity aspect of food and grains, so to speak, right? Or grains as a whole. Outside of that, then you got cattle, feeder hogs. Y'all know the whole mantra. Again, we're investors, so we know how to pull up this data. Excuse me. So again, all I'm saying is these farmers now are finna have to eat that bill, right? These farmers are finna get ready to eat that bill because now they can't move that crop because now their biggest, buyer of their crop is saying, hey, whoa, because me and president, your chief and commander can't seem to meet eye to eye on this scenario where they didn't put in this policy, right? We didn't benefited from off years since time immemorial of late. No one came to change that. And now all of a sudden y'all want to change that, throw a monkey wrench in our GDP and our money value, money grab. All right, we ain't gonna buy your little products now. We're gonna slam the brakes on your what? Your little soybean, your little high corn fructose corn, right? Your little GMO RBTAT growth hormone chickens, right? Your little overstimulated, growth hormone cows and beef. We finna slam the brakes on all that, or we're gonna reduce at least to a minimum. And so again, these farmers are like, hey, whoa, right? Again, and then some of them will be the same ones saying, "Hey, man, I don't believe in government welfare. I don't believe in socialism. I don't believe in social stimulus." That's why I like to use that word more than just idea of social welfare, because they try to again make it seem like that's like a blasphemy word to use the word socialist, right? But that's basically what it is. So when they bailed out the banks, right? When they bailed out the banks back in what 2008, 2009, all these other, what did they use to bail out the banks with, guys? Somebody educate me, since I'm the one who can't seem to still understand that value of what that really is. Who money did they use to bail out the banks when the banks got caught up in run, all that kind of stuff? Who money did they use? AIG, all the other stuff out there, and all kind of who money did they use? They used your money. They used the taxpayers' money as a form of social welfare to protect these too big to fail banks. These automakers like GM and Ford that was getting ready to go under. They was getting ready to go under. And who bailed them out? The government? No. They got the credit for it. They got the credit for it, but that bill, or that holding of the bag was passed off to the American taxpayer. I mean, I ain't talking that crazy that we don't already know in a lot of ways. And if you don't know, you can go research it. That money got passed off to the what? The average resident, the taxpayer. And so that's the same thing. Again, I'm going somewhere with this. Walk with your brother for 2 seconds, 2 more seconds here. That's the same thing that's going to happen. That's the same thing that's going to happen with these tariffs. The government is not going to soften that blow. And if they is, they ain't showed me nothing that's going to prove it. They ain't showed me nothing that they got a bill or a referendum in place to say, well, hey, due to the tariff that we're warring against, having this Cold War against China with, we're going to eat, any kind of, major deficit that you guys are going to suffer at the hands of this, and we'll make sure everybody's going to be protected. Wrong. They're only going to protect their special interests. They have a special interest to make sure that U.S. farmers are what? Well taken care of, because they benefit off the stock investments that they get through investing in these what? These farmers on the commodities market. The feeder corn, the feeder cattle, the feeder hogs, the soy, the coffee, the other grains that are being publicly traded. Right? Because I know there's some people out there that just make a killing of money just trading those commodities and those commodities long all day long. It's like trading the inverse to gold. Right? You trade gold, Nugget, AU, GLD, right? Well, what's the inverse? Nugget, right? There's others out there who NUGT. You trade the inverse on the days that the gold is not spiking. Trade the inverse. It's like trading the TQQQ, the technology sector, as opposed to trading what? The QQQs when they're bullish. And so they have a special interest, to make sure that they keep these farmers what? Protect. So guess who's gonna get the first welfare check? Who's getting the first welfare check based upon the tariffs being levied right now against China? This new batch of tariffs, getting levied against China, and then China's going to turn around and retaliate, which they're going to do, right? Which we're seeing signs of it tonight. Who's going to be the first ones to get bailed out? I'll wait. Who's going to be the first people to get bailed out? Right? Is it going to be this company? Is it going to be that sector? Is it going to be this little? Who's going to be the first ones to get bailed out? Right? It's going to be the U.S. farmers. The Republican branch of the government already had a stimulated package already waiting in the wings already. And they didn't specify that to you guys. They had a package already waiting in the wind on ice. In the event that this happens, they had a stimulus package already. They already got 12 billion already, guys, that was sitting on ice. to pay these farmers, to stimulate these farmers to keep them from going under, which they obviously is if they can't take an L like the average person like you and I take an L, and we mess around and lose our job, right? We mess around and lose our job at necessarily sometimes not even no fault of our own, right? And they say, okay, well, you can get unemployment. Okay, think how long it takes to get unemployment. Once you lose a job or something happen, you got to go through all this lengthy process. They got to investigate this. They got to make sure all the stuff is taken care of first. That don't work the same for these corporate commodity-based companies. They got that money already sitting on ice, and just as fast as you can blink your eye, these farmers finna get a nice little check out the gate. They ain't got to fill out no government contracts. They ain't got to go through the lengthy process of going through a screening process. Obviously, they got to make sure they have their basic license stuff, which is not hard for them to produce that. But the most part, they're going to get that cash like right away. And so again, 12, I think it's like 18 or 12 billion dollars already isolated by the Republican Party put together to stimulate the farmers out the gate, out the gate, out the gate. Now, how many of you guys in the batch, again, nothing against farmers, right? Because we know farmers are very crucial and vital in our communities, right? By all intents and purposes. How many of you guys listening right now tonight is a farmer? Again, this is not a swipe against a farmer. I'm not saying that. I'm just putting out a little stat here, right? How many of you guys are farmers, right? Or how many your family members may be farmers that may also again suffer from the idea that this is going to hurt their bottom line a little bit. And so again, I'm saying in the same breath, it's all about interest. Again, like I said earlier, there's no such thing as permanent friends, permanent this, best this, that. Is only what? Permanent interest. And the interest is a quid pro quo relationship. Don't get it twisted. They're not just doing it just because, oh man, let's make America great again. It's the farmers and again this, that, and the third. Because if that was the case, I'm gonna drop a bombshell on y'all real quick. Now I'm gonna drop a bombshell on y'all real quick. If that was the case, if they really truly cared from a very empathetic or sympathetic posture, why did they send these soldiers off to go to war? And they're the least likely to treat these people when they come back home, battered, and beat down and messed up mentally. They getting the most crappiest treatment ever on the planet. These people that went off to lose life and limb for the glory, quote unquote, of America, come back and get the shabbiest treatment of all times ever. And big investment bankers and lobbyists and the White House and pundits and they're sitting there comfortable and knowing this, and then they will actually try to take this process, knowing these people need this care and this service. They take the bureaucratic approach to it. No, we got to legislate, we got to vote on it, and we got to, we really got to diagram this stuff, y'all. We can't just jump too soon to just start, mandating this. But on the flip side, they'll draft up some of the biggest defense budgets ever in the human history and stimulate the war machine in American military unequivocal to anything else on the planet. Because that's what a lot of your taxpayer dollars really go to, is go to defense. Let's don't get it twisted. Y'all gonna get this work today if you think different. And there's no disrespect. But majority of your taxpayer money, the main bulk of it that's really, really not really accounted for in your mind, it goes to defense budgets. So they can quote unquote so-called keep America safe again. Right? But in the same breath, you would say, well, okay, well, hey, if I had a choice, then if that's the case, well, why not, in the same breath, take a good portion of that when these soldiers do come back from combat, let's make sure they get the best care ever. Let's make sure they get the best care ever. Is that happening? Some of you guys got military people in y'all family, veterans, and know somebody, whatever. Are they getting the best A1 care that these so-called people that can afford these private practitioner doctors to get Botox injection? Are they getting the best of those people to help them with their case? Psychological psychologists or specialists in the certain medical fields, are they getting the best of the best to go work on our soldiers? I'll wait. But they can say, well, you know what? The farmers deserve more in this perspective. In this perspective, the farmers deserve more than the troops. I want y'all to think about that for a moment. Let that marinate. Again, I ain't trying to pit sides or which one or the other, but again, I'm just trying to provide a balance. are the soldiers getting the best of what they need, but they gonna lose limb and life for the so-called freedom for the farmers can produce these little ratchet little GMO soybeans. No disrespect to them. Again, I'm having a little fun too, but they have the freedom to produce their little soybean and then ship it off to China, right, or these other countries, and they could benefit a nice profit off that. The soldiers are providing the so-called quote unquote safety. And I'm not making this just about soldiers, but I'm just painting a picture of how we need to kind of realize the cogs in this overall clock or this wheel that sometimes get overlooked in terms of how we talk about social stimuli, social welfare, social again, engaging people to make sure that certain aspects of the economy don't fail or fall or falter that may also disrupt the other major aspect of the GDP growth that we're benefiting off of. So that's the same way when they're dropping these different data points week over week and PMI numbers and ag numbers and jobless claims and all these different data points that we're looking at when they saying, well, hey, well, we look good because we just added another 36,000 jobs, right? But they're not accounting for, again, the majority of that, aspect of the so-called money that could be made off that is probably non-existent, not even be counted on the books no time soon because there's a big major deficit happening over here on this side of the house because they ain't got the books balanced properly. And you're still dealing with trade war tariffs, and now you got the EU and America fighting now. That's the next biggest thing that people keep overlooking. Europe is getting ready to lever tariffs against America now because Trump went after Europe too. The auto tariff. That's another big major conversation that's happening right now. The auto tariffs in Europe. They finna start fleecing the brakes off the Brits and the UK and all these people in Europe. They finna get that work. They finna get that work. Trump going after them too. They're getting hit too. And it only compounds because the biggest trade war between America and China, which these kind of being the logistical brokers, so to speak, if I could use that terminology, to really, deviate a lot of the stuff that these other countries are benefiting off, and the cars and the crops and the plastics and the clothing and everything that's been hit always behind tariff. Because y'all seen the list, y'all seen the same list I saw of what they saw. The biggest thing that was going to get hit first was going to be what? Cell phones, toys. They said what else? They said some certain clothes. I think y'all seen that report we put out. It was all over the news that was gonna get hit hardest off this next wave of tariffs, right? And so again, they didn't also say those soybeans. They left that out for some reason because they know why. They left out the farmers, so to speak, even though they had certain farmers coming on live to speak about their scenario. The reason why they didn't actually put that in the documents for the public to see it because they already knew they had the farmers taken care of. They already knew that they had a stimulus check already waiting, a welfare check already waiting for the farmers on ice in the event that this went down. Allocated budget. But they don't got money again for the schools to get better. They don't have money to kind of fix the water in Flint. Again, I'm kind of going with a 10-4 hat on for just for 2 seconds. Just for 2 seconds. They don't got money to fix, the bridges and the roads. They don't got money to reform a lot of these kind of, ate up, little, penal systems around the country. And they don't got money for that now. They don't got money for that. They don't got money to help people with student loan debt. They don't got money for that kind of stuff. But again, because there's no interest in that, they can't make money off that because that's a form of what social welfare, so to speak, to improve the quality of the people that are paying you taxes. They don't have money for that because they don't understand that a happy worker is one that's well taken care of. The same way Chick-fil-A, they're off on Sundays. No ifs, buts about it. They close down shop on Sundays and say, no, we're giving our people a day off. Because sometimes it's not all about profit. It's the quality of the worker that you can what? In terms of taking care of them. And we're going to pay them a livable wage. We're going to pay them a livable wage that keeps up with the level of the inflation that's happening constantly year over year in the country. We're going to pay them somewhat of a decent rate of wage. So you don't have that kind of ethic value or moral compass that's being spread out across the entire what spectrum of what we consider to be, a government that has the best interest of people. So again, I'm saying all that to say this again. This is not a conspiratorial kind of conversation. I'm saying that you need to look at every single thing that's on the table and not be bamboozled, especially, again, if you're a long-term investor. Even if not that, a day trader too, because we move on what? Volatility. The market moves off volatility, right? The market moves off volatility. We need price action. We need expansion, right? We got contractions and then we have expansion. The money's been made through what? Expansions, either to the downside or to the upside, right? And so again, in this moment. So again, now let me go to the little thing here because I ain't got much time left before I have to kind of come off here in a second here. But this is your futures market based upon the retaliatory value or that of the verbiage alone that the Chinese people are using now, and in retrospect to that whole kind of tariff that was leveled against them. This is what they're doing to let you know that, hey, okay, uh, when we kind of take this real live in public, y'all got to deal with this, right? Y'all gonna have to deal with this. So right now, the Dow is down 189 points. Now we know this can easily change. We ain't crazy now. We're not crazy. Matter of fact, let me re-update that because it went dead on me for a moment. So it might have just went down for a minute. It's even worse now. It's even worse now. Y'all see it got stuck. I got my computer locked up on me about 30 minutes ago. We were only down 189 points. Now we're down 269 points. Another deep dive happening right now in the future market, guys. Right now, as we're speaking, we're down 271 points. 32 points on the S&P 500, 96 points on the NASDAQ. We know the NASDAQ definitely was at all-time high, so it had definitely more to lose at this point because it was up so high than even everything else, the other indices. And small cap Russell 2000 has been getting hit the hardest above all things. The Russell small cap 2000, which is Russell 2000, small cap 2000, is down 20 points. The VIX is up 0.71%. The European market is here in terms of Germany and the FTSE 100. DAX is down. German market is down 121 points. The FTSE is down 57 points. Right. Let's come down here to the Asian market because that's what everybody paying attention. The Nikkei 225 is down 350 points right now tonight. That is a lot for that market, even in minor correction moments when we don't have the uncertainty and ambiguity. That is a lot for them to drop this much. And I know it's still the future market, but that is a big drop tonight. The Topix is down 21 points. The Hang Seng, which is Japan market, ain't even came online yet. The China share, the CSI 300, China 850. Y'all know the Singapore market. Only one of them is open right now. Obviously, the Singapore and ASX 200 is down 48 points. That's a lot of points for them. Don't get it twisted. If you study their market, that's a lot of points for them. Right? The Korean market, the Kospi 200. This one right here, that's the European market. Excuse me, the Korean market. They're down 2.1%. That's a lot for them. That's a lot for them. You see how small their market is on a 269 basis point value and relates to a big behemoth like a Dow component or a Nikkei, right? Or even a Singapore. That's a lot for them to be down that much. Now let's run over here real quick to the commodities market, right? Let's go there, right? We're just talking about commodities, right? Look at here, look at here. Crude, 0.31, down 0.52%. Brent oil, 33. Natural gas, 0.005, right? 0.19%. US gold up 75, what? 75 little point percentage, right? Of point values, right? Up 0.06%. All right. Steel is down. Excuse me, silver is down. Copper is down. US soybean. There we go with that US soybean. They're down what? 2 basis points. 0.22%. Now, a lot of people may say, well, don't seem to be much in relation to what some of the other markets we'll be seeing, Brother Africa, but you got to understand that market to understand the brevity or the gravity of how much that is in relation to how that market moves. You don't get mad swings like we get, in the Dow and the SP or the NASDAQ and the Qs that you get in these commodity markets because they're more on an even scale because their market is planned out, again, fiscal years in advance because they know during cash crop season, that's when they get that big bang when they can turn that over into a monetary gain of value when all the process is done. This is the ebb and flow of how those markets move. It's down again 1.76%. Down. Excuse me, point basis point was down about 2 basis points just a few minutes ago. That's a lot because that market is finna get hit right now. Again, based upon that was one of the biggest negotiating tools that USA was using with China because they are some of the biggest exporters, or excuse me, importers of what? US soy. And so you see the big gap down here. Look at this gap down. That's a big gap down. Look here. You got people over here already starting to panic. Soybeans may go down to the 500s. It's at the 800s now. They're saying that it may go all the way down to the 500. Not that they right or not, but again, you can see what I'm talking about in terms of the panic. in certain aspect of people who trade these commodities, right? Because they understand that was a big bargaining chip on the table, that China was going to buy so much of soybean from America, this, that, and the third. And farmers were banking on that too. They was banking on a speculative, so-called earnest money. For some of you guys that know what I'm talking about in terms of earnest money. If you bought homes or whatever, you put down some earnest money to say, hey, I'm serious about buying your home. You put down a little earnest money. So the farmers, they were kind of banking on the earnest money that the Chinese put down, saying, "Hey, we're gonna buy so many soybeans, we can go ahead and get this tariff war thing out of our hairs." And America was like, "Yeah, we're gonna take care of you, right? We're gonna make sure, yeah, you guys take care of it too behind this, tariff deal, because we know the Chinese, the Asians love a lot of soy, again. So hey, you're good to go." And so again, if the soybean market obviously, goes all the way down to 500, whew, you see where I'm going with this? So again, just from a yearly perspective, look at the soybean market. Let's go there, right? Let's go there. So remember when I was talking about around about the first and second quarter of 2018, that was when the reality of this whole tariff thing that Trump brought about, when the tariff war, began to be a kind of like a household name, really started going into effect around that fiscal two of the quarter, fiscal quarter of the fiscal year. What happened to the soybean market? Look at here. February, we talk about what was that about May, which is around about the second quarter of the fiscal, May 27th, basically about June 2018. Look what happened to the soybean market, guys. Look at it. I'm not making this stuff up. I'm not making this stuff up. It dropped from 1,000, right? The soybean market was just riding the coat, just eating good. They were eating good on those. Them farmers were getting what they call high on the hog or fat on the hog. Soybean farmers were just eating real good. They'll walk around with the belly extended of the belt and then wrong with that again. Y'all know what I'm saying. They were eating good. And all of a sudden, their world came to an end literally overnight. So from 1,045 was a high around, around near about, let's say about the 1st of June, all the way down to the 800s by September. So basically, about a 3-month span, they lost over 300 points behind this tariff thing, how it's affecting the soybean in the farmers market. You had a nice little bounce, right? Came back down, tested those lows again, right? Which is around about what? 812, 820 something points. Got a nice little reprieve when they started stimulating the market, saying, "Hey, we're gonna take care of you." That's when all the promises came in from China. No, we're gonna buy your goods. We know, trust me, we're gonna buy soybeans, blah, 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 all that kind of stuff. Went up there and started hitting some major resistance around this 915, 925 area, because again, there was no uncertainty, there was no certainty that they were going to buy this stuff. It was just a whole lot of talking points and rhetoric. And then guess what? The reality started setting in. Right, right. But the third month of this year, the reality starts setting in that, hey, this may not go well for us, guys, because what happened is between this period right here, between let's say September and December of 2018, guess what happened? China found them another supplier. People probably This probably went over a lot of people's head, but I was already on it. Y'all know your brother be on it. Y'all know I don't miss no data, but I be on it. Not that I know it all, but I try to stay informed much as I can through all aspects of the market. Guess what happened during that time span, y'all? China found them a new supplier. They went to the country of Brazil and bought a boatload of soybeans. I did not know Brazil, I think, is the world's second largest soybean producer on the planet. Little old Brazil, or big Brazil, whatever you want to call it, little emerging market down there, Brazil. China found them a new supplier in the Brazilian market and went and bought a boatload, literally tons of soybeans from Brazil, because at that point they were mad at America. Again, President Z and Trump fighting each other. They went right on down to Brazil and got them found them a new supplier. Now, do y'all think right now, with the way that the retaliation is happening right now, with China fighting back and pushing back, get to 250 billion, do you think China gonna think twice about going right back down to Brazil and getting them some new doggone soybean? And here's the flip side to that: they can grow soybean year round down there in Brazil because the weather is conducive. Dang near. Farmers in America can't necessarily do that, because a lot of the soybean farms, now you got to do your research. A lot of the soybean farmers in America are what? Midwest, in most cases. They're Midwest. Ohio, Oklahoma, Texas, a lot of those areas. And so they have winter season that actually stifle their ability to grow. So they're a cyclical market. That's what a cyclical market is. They're only on a seasonal time clock in terms of how they make their money. And if they miss their season, oh, they're in trouble. They're in trouble. And so again, this is the part of the market where, okay, man, you say, well, dang, I didn't even think about that. Or that kind of missed me there. So if you know somebody that's affected by it, you be like, oh, I see why they're affected. Like some of us may know farmers, some of us may know a family member or some or whatever. Y'all get what I'm saying here. So guess what happened? It instantly began to what? The soybean market began to fall off and sell off. And so look at the sell off here, guys. So basically from, you know, uh again, basically from, if it, as you can see here, April, the soybean market been selling off again. All the way down to where we at tonight, which obviously even more detriment because you had a big gap down tonight. That's what makes this night special and special only because we know the retaliation was coming. So you got a big gap down in the soybean market tonight, right? Where they're saying, "Hey, now we at a new low, guys." On if you go back and look at the 52-week chart, the 52-week chart on soybeans, right? The low was round way back here in basically, around July, dang near July of 2018 when it hit 810 points on the soybean market. Now you've broken that low. You've broken that big level of support that was in the soybean market, which was a major support because you can always go off the lowest point that the market hit on the 52-week chart. It broke that level of support. It broke that level of support tonight and gapped down below it. And you had a low of 804 points, all-time low, a new 52-week low since the last big sell-off. And you say, well, dang, brother African, why is that important? I mean, soybean, I don't invest in soybean. This is a major aspect of when you start looking at these smaller commodities that people kind of overlook a lot of time in terms of how the devastation of how important it is in the overall aspect of the market in terms of kind of what rallies when someone say, now if this sector is hurting, then you know something wrong. That kind of conversation piece. When this is hurting, you know this is getting bad. And this is one of those moments, guys. This is one of those moments. And it's reflective of not only the Dow component selling off tonight, the S&P 500 selling off tonight, the NASDAQ selling off tonight, right? The small cap 2000, the Russell 2000 selling off tonight. The German DAX market getting beat up tonight. The FTSE 100 are getting beat up tonight. The Nikkei 225 is getting beat up tonight. The Kospi 200 is getting beat up at the Korean market. I go on. The Hang Seng, when it opened up, get beat up tonight. The Singapore market getting beat up tonight. And this is not like just a natural scenario where, okay, just a weekend, ain't no big deal, afterward, just calm down. No, we know why it's getting beat up. Because guess what? Go back to what I was saying earlier. What is our commandments as investors? What is the commandments we live by as investors? Those 3 commandments, right? We spoke about them earlier. Now I'm going to see if y'all been paying attention with your brother. You're hanging out with me this long. Roll with me for a second. That's why I say it's a method to my madness, right? What is the 3 commandments we live by, guys? Somebody throw that in the back chat. Let me see if y'all rolling with your brother. What are our 3 commandments? Right? What are the 3 commandments we live by, guys? Every single day when we wake up to trade this market, what do we live by? We do what to the rumor? We do what to the rumor, guys? We buy the rumor. We sell the news, and we watch, rinse, repeat. So what commandment are we in right now? We're in that second commandment, right? I'm using the religious, parable here, but y'all get what I'm saying. We are in the sell the news event. And this is not like one of the little, okay, ambiguity kind of based sell the news reality. This is a more emphatic value where we can back it up with the data. We can back it up with the reality that, okay, now the White House has to jump into what, life preserver mode. They got to jump into what we call corporate welfare mode, socialist stimulus, social welfare mode. And so the first people they're gonna cut a welfare check to is gonna be who? To the U.S. farmers. Again, we already know the automakers still been on shaky ground since the last major market crash back in 2008, and they slowly but surely been trying to rebound. And now this tariffs with the steel and aluminum, again, Who gonna eat that cost? Do y'all know they're already saying that the average auto in America can 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 easily go up additional $3,000. So any vehicle above the price of, I think they say around about 30,000 or 30, between 30,000 and 35,000, and obviously anything above that is about to go up additional $3,000. An additional $3,000. That's about a 3% increase. To a lot of people, they already say, well, hey, that ain't a lot of money. Okay, well, that is to a family that's budgeting, that has a budget they live by. Okay, that's a lot. We see that every day as an investor. We know that to be true because we're disciplined. We understand how much 3% is. 3% could be a lot of money. 3% can be a ton of money as an investor or a trader. And y'all know what I'm saying too. Y'all know exactly what I'm saying. Catch 3% on a scalp trade and put some money behind it and see once you get real excited. Obviously, if you profited, if you're on the profit side of the house. So again, who gonna eat that bill? Is the government gonna eat that bill, or are they gonna pass that bill off to you? I'll wait. I'll wait. So again, all I'm saying is be balanced, guys. Be balanced. So the same way people like to go and praise these different institutions, these bankers, the government, or whatever. Again, this ain't no anti-government, none of that stuff. I'm just saying, you as an individual, it's everything in your right to be, again, very cognizant and very comprehended on what's happening around you at all times, because we don't get a chance to get do-overs. We're not getting a social stimulus welfare check. We don't have people rushing to our aid if our family go through a setback or one of our family members lose a job. Okay, yeah, you can sign up for unemployment. Yeah, okay, go through that chitlin line and go through that seamless process, and then hope you don't get rejected because all this small line red print and fine line stuff, they try to hold up the bag because they're gonna make it seem like you got to be feeling entitled or indebted to them because they got you feeling like they get you're doing you a favor, that kind of mentality. So they have you feeling like like you less than. And here you is, you got pride, you got dignity, you got integrity about yourself, and you still got to deal with that. But these big corporate interest people, they don't send their people through that. They got an interest in. They don't have to go through that. They don't have a sleepless night. And if they do have a sleepless night, it's because they greedy and they can't really go through something that we got to go through, the average person, and they feel like they're entitled to. So they greed is based on entitlement as opposed to really getting out there having to grind hard and really, get what they feel like they earn. At the saying goes, you keep what you kill. Well, I tell you what, if that's the case, again, no disrespect to my farmer friends or farmers out there, y'all gonna keep what y'all kill, and that's gonna be them rotten soybeans that's in them silos because Trump then dealt y'all a bad hand. Because, not saying it's his fault, but I'm saying since they started this, y'all got caught in the crossfire. Y'all getting caught in the crossfire. The automakers, they already on pins needed. They finna get caught in the crossfire. But again, I say this like I was saying before. Who's gonna really eat the benefit of eat that on the back end though? Not them necessarily. The taxpayer, you. Soybean probably gonna go up in the grocery store. They're already saying car prices when they go up. Any car above 30,000, 35,000, when they go up extra about 3%, a minimum of 3%, about 3,000. I have not seen one stipend come through from the government that says, guess what? We're gonna give you a $3,000 extra stipend to pad your car buying process because of this tariffs. So if you buy a vehicle above the price of 35,000, we're gonna throw you a $3,000 government check to help you out. Because we know the cost of living ain't still going up, and there's no boost increases in terms of your job giving you a big boost in your pay to help compensate for that 3% or that extra percentage value that's gonna go up on these goods and services. So we're gonna take care of y'all, America, since y'all do us so good and keep us going. We're gonna take care of y'all. I'll wait. I'll wait. I'll wait. But the Asian market, they're gonna take care of their people. They already been stimulating the economy. When I say the economy, they've been stimulating the economy. Their people. It's a difference. When America say they stimulating our economy, guess who get that stimulus? I'm just finna go there. Guess who get that stimulus when America Come on, live and tell you, we're gonna stimulate the economy. We're gonna stimulate, the Fed's gonna, we're gonna do some quantitative easing, right? We're gonna get this extra surplus of money, right? And guess who get that money? Do it go to you and I? Does it go to you and I? Do they go to these corporations, right, and say, well, hey, we need you guys to, kind of up the ante a little bit, do like a little special dividend or pay increase for your workers, a stimulus, and we're gonna pay y'all a welfare check or a check to make sure that we pad y'all in the back end for doing something good for the workers. Who do they give that money to? They give it to the corporations to make sure they're able to run their businesses in an essence to compete with that of the global market, so they can kind of keep what turning over the GDP, the data that they live by, and it goes towards making sure that the government look good, not the American people. And you got people out there saying, I don't want no handout. And we go down, I go down because the government, they policies and levied and pushed forth what they could, the best they could, to make sure that we're gonna be in the best hands. So I take one for the L for the team. What? Wait, what? What rock you been living under? What bear cave you been hibernating in for the past 100 plus years? What? So I'm just saying, I'm just saying, be well rounded. Let me go back to the screen. I'm sorry. Be well rounded, guys. Be balanced, right? Don't be myopic. Don't make that mistake of having a myopic view, a staunch view, and knowing that there's always more data out there that you can probably relate to help give you a more well-rounded perspective. The worst disservice you could ever do is take a very hard line approach to something where, in the essence, where you see it as 100% absolute, as if there's no ambiguity or wavering aspects of data that's always going to evolve or gradually increase or decrease to the point where you might have to adjust your thesis. Because in that moment, you can find yourself getting hurt in any aspect of knowledge, right? You always have to understand that things change. Some things change rapidly than others. Some things takes a little bit more progressive time. But at the end of the day, as an investor, as a trader, what do we adjust to? We adjust to change. We adjust to different catalysts, different fundamental catalysts that come down that alters and moves the market. And so tonight, what is our catalyst? Our catalyst is, let's go to the basic headline on investing.com. You can run over to Reuters and everybody else too, right? And see what they're talking about. Yen gains, but what? The one, what? Aussie dip. China trade war escalates, right? We can go on for days about those kind of realities, right? The stock future slip in Asia amid trade standoff. Again, there's many other headlines that we can see. We can just go through the gauntlet of them, right? There's tons of them, right? Ultimately, again, this whole reality gets passed off to the who? To you, because that's who's gonna eat this. That's who's getting ready to eat this crow. We gonna eat it. But y'all know what I mean when I say that. But we're gonna have to be the ones to eat that. So again, when you go to your little grocery store, you go over to Trader Joe's and Kroger's and Publix and All Day and Wegmans and whatever your little favorite grocery store is, and you want to buy your little microwave. Again, I ain't popping shop, but y'all know they having fun in the same breath too. But it's serious. You go buy your little, your little edamame, right, in a little single pack pouches or whatever, and you like, well, man, this thing was like $1.99, a week ago. Now it's $2.99 or $2.50, $2.60, or not more. You know what I mean, man? Y'all went up on my edamame, man. This thing used to be dirt cheap. This is how that price gets passed off to the consumer. This is how these prices get passed off to you, because they feel like, well, hey, you already living in America. Be grateful. Be grateful, Joker. It could be worse. Pay that extra taxation. What? So some people say, hey, brother, that's the price, price of cost of doing business in America. Okay, if you take that narrative and that approach, then again, guarantee you this. Give me a complete thesis about, every itemization that comes out your money in terms of your paychecks, in terms of taxation. Explain to me what does it really go to in a way that it really, really, truly, truly, truly benefits you at the end of the day, for them to take that kind of nominal value out your check every week or every month or every 2 weeks. Somebody explain that to me then. If it really, really is for the greater good or the longevity of that of the American worker to have to be overtaxed and fleeced the way that it's happening, and people not realize the bulk of the money that they need to be kind of perusing or actually being able to kind of compensate for that of these things that happen to us, like a tariff, trade war, or this, that, the third. If they only knew what we know, again, we know this as investors traders, but if they knew that the way to compensate or get back some of that is through the US based markets, I guarantee a lot of them will start hanging out with y'all, asking y'all more questions about the stock market stuff. Now it's like, man, it's foreign to them. They're like, man, what you doing? They don't understand, your sacrifice, your growth and evolution in this, right? And again, it's lonely when you only one that knows a lot of this jargon and terminology and knowledge, and you can't really share it with anybody else because they don't understand. It's like a foreign language to them. They soon say, man, okay, what happened last night in the basketball game? All right, Joker, the basketball game ain't making me no money. Unless I'm going to bet you against a team, but that is just short lived. That's a very speculative bet. Find me something that I can be in a position where I can make money on a consistent basis without a middleman, without a scenario where I got to go through this lengthy screening process or discriminatory process or all that kind of stuff. Find me something that could do something that can give me that kind of opportunity. I guarantee if they knew what we know and what we knew, and we're learning more and more, I guarantee more people be trying to get in this field every single day. They'll be running to this because they don't understand as the consumer that these costs are getting passed on to them. These extra boosts in prices of these commodities, these goods, and these services are getting passed on to them. And they're like, oh, man, it was just cheaper last week. Man, what's the problem? What's going on, bro? They don't understand what's happening because they don't understand this aspect of geopolitics. Not that you have to go deep into all the nature of rhetoric in terms of what politics really means. It's rhetoric, right? But the propagandized value of rhetoric, set it up to it becomes reality, right? That basically ain't really have to be backed by data. It just we just set it enough that we say so and it's true. So again, we're looking at the data, we're looking at the numbers. The numbers don't add up. Oh, the numbers don't add up. But you got a lot of money to juice, the defense budget spending. You got a lot of money to juice, again, corporate welfare and social welfare through stimulating all these so-called failing aspects of the indices or sectors of commodities that boost the bottom line for investors because they have an interest in it. But you can't take care of the average person who's had to eat this right now because that tax is going to get passed off to them. That tax is going to get passed off to somebody's grandmother who's already on a fixed income and who was just thinking she just saved up enough money to get her a new vehicle because the old one she got ain't, can't. Hey, granny, it's time you get a new vehicle. Okay, baby, I've been saving for the past 3 years. I finally got a little extra now, where I can do something now because I'm on fixed income. I got enough. I got just enough now. I got just enough now. And guess what? She gonna go down to that dealership and the vehicle she's been trying to get that's gonna really help her because whatever she got to pay an extra $3,000-$4,000. She ain't get no stipend. She ain't get no extra boost stimulus from the government. I'll wait. Some of her medical devices, the same thing. That's the whole big issue too. But medical people been gouging people, right? Through insurance, co-pays, and all that stuff. They've been gouging people for a long time off that. Inflating prices on stuff, getting over because they know people need what they need and they can't sit here and wait to go through all that rigmarole, so they end up paying and you kind of succumbing to the idea, whatever the medical world say, a big pharma kill. Y'all know the old issue with pharmacies, right? The pharmaceutical community pretty much run the world. Let's keep it 100, right? They pretty much run the world because they got the most money, right? Because they know they make money off you getting sick. They make money off you getting sick. They don't get money off you being healthy. Let's not play this game, guys. Let's not play this game. But we get to see it again. We get to see it as investors because now we see what these biotech companies do. We see what these pharmaceuticals companies do. We see what the healthcare sector does. They have a person on the street that don't know this stuff. They have no clue what United Health is doing, what Merck is doing, what Pfizer is doing, what AstraZeneca is doing, what Gilead is doing, what Biogen is doing. Right? We can go on and on and on and on. What Amgen is doing. We can go on and on and on. They have no clue, but we get a chance to see what's going on because we read their filings, we read what their press releases, and understand, their trial results and their efficacy, data sheets and all this. We get a chance to see all this stuff. basic information that the average American gets a chance to see too, but they have no clue about it. They just move from the speculative aspect of what they think they know, or what they kind of heard in passing, or what, even worse, what the news tells them, what the news channels are telling them. Again, respectability journalism has been gone out the window. That is no more. It's all about special interests and views and drama, not based upon factual data that they can present. It's about special interests and drama because they want ratings, they want views. The Nielsen rating used to stand for something. Back in the days, the Nielsen rating used to actually stand for something. Now we know it's skewed data and disproportionate, cookbooks and all kind of things to kind of make you think that this appearing to be one way and it's not. They just keep it 100. So again, all I'm saying is, in closing, let me get off, let me get ready to get off here. In closing, while we see the market here taking a major L tonight, and some of us might have been bullish going into the weekend and might have bought calls, and y'all know how this market goes. I'm gonna buy some calls in the weekend because guess what? The market rallied a little bit, right? Going into the close Friday, the market got rallied a little bit, and we closed green. When we were down, a lot of points, 400 points Friday in the Dow, and the market rallied all the way back and closed green, and the SP 500 closed green, and it went up a little extra in after hours. So again, those people who bought a ton of calls because they're that, man, we're gonna be okay because the market ate this up like it wasn't nothing. Because that's what we've been used to lately, right? The market, Trump gonna find a way to bail us out. They're gonna stimulate the market. The pump protection team gonna kick in. Well, guess what? Now, right? And some people kind of went heavy with those call buys. And look where they at now in the future market tonight. Market down 245 points. I know it's just right now. Again, it can easily pump, then they can pump it hard. But we talk about overcoming that kind of level of damning news at this juncture. To keep fighting that, catalyst over catalyst over catalyst, and everybody keep trying to say it's baked into the market. It's baked into the market. Stop. You sound like you baking pizzas or baking potatoes, man. Everything ain't baked into the market. You got to start with that rhetoric. You got to realize that the data is only conclusive or good for one headline to the next because, again, in that moment, there are different other players that's also, a part of this kind of this algorithm of life in terms of how the GDP works from a global perspective, right? This price of soybean or the ideal that soybean is obviously hurting now in terms of American farm. That's going to hurt if there's no other supplier. That may hurt that consumer that depend upon that, in some kind of form or fashion. If they can instantly find another supplier, that's going to mess up their car. It's going to mess up the ebb and flow. It's going to mess up their way of naturally doing business. And so again, we need not be, again, careless in the way that we go about approaching this market, the way we go to approach a trade, the way we go about approaching an investment. We need not be clueless to the things that are governing, almost like a governing body to what we need to be perusing day over day. We need not be, again, sleep at the wheel when these things are happening. And so we wake up Monday and the market is down 300-400 points, and we're like, well, man, what happened, bro? Y'all said Trump got our back, bro. Y'all say, Trump gangster with the thing. Trump like Suge Knight, hey, that kind of reality. And now you gotta say, oh, whoa, 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 whoa. And then 2 or 3 weeks from now, when that tariff actually starts, formulating and getting through the system, where it started affecting, actually getting to on the shelves, where you start to see that price increase, and your wife or your husband, whoever go to buy the grocery, go start say, hey, man, they went up on this. Man, what's going on, man? This is why. Then you can explain it to them. Then you can explain it to them in that moment. Hey, this is why this is like this. But that's okay because I've been planning. I've been doing a little something extra. I've been trying to find ways to pad this. In my growth and evolution as an investor trader, this is why This is why I'm learning this, and I'm trying to get to a point where I'm comfortable and have a continuity in what I do. Because at some point it's going to be and it's going to be almost prerequisite, right? That you have some other multiple stream of income coming in because there's no such thing as job security anymore. It's just not there, and you have to have other means of way to get to the bag. And more importantly, Other ways you can get to it without a middleman in your way, blocking you, discriminating against you, holding you up, all this, that, and the third, or pinching off that what you're getting because they found a way to hustle you out of your moment. When if you knew what you knew, you go directly to the source yourself, educate yourself properly, get with other brothers and sisters who are doing the same thing, think tank, strategize, and then go out there and execute. That's what we come together for, guys. This is why we go hard in the paint. This is why we have a lot sometimes sleepless nights and we stay up late in our offices and we crashing on the floor, or we binging for a college test. We just fall asleep with our laptops in our laps. And the spouse or the husband or whomever don't understand somewhat to a degree, but they don't understand how hard you're going, how serious you take this, because you realize your path of financial freedom is not going and giving the best to somebody else, the best of your life for 30 some odd years, 20 some odd years, and saying that you're comfortable with that. And them paying you a micro value of what you're really worth. You can't convince me that $20 an hour is worth your entire genius that you bring to these people every single day. Whether you get the exercises or not, they get the best of you for 8 hours every day and then tell you worth $20 an hour. If you don't get out my face with that slave bull crap, and people will convince you that's the way to go about your life. Miss me with that bull crap. And if we knew this years ago, or if our parents had the gall to teach us this stuff, for some of us did, some of us probably did. But if we knew what we really supposed to have known, if they really had our best interest in mind to make this the so-called greatest country in the world, they would spend more time educating you properly on what you really need to be focusing on, as opposed to giving you the bare minimum and saying you go out there and figure it out. And at the same time, hold this L, this debt L. Take this $100,000 education that ain't worth probably, maybe 10,000, 8,000. Hold this debt L over your back too. Hold these student loans on your back too. In the same breath, stay in debt, because in debt we got you. We got you. So again, I'm just here to provide some context, some content and context. Whether you agree with me or you don't, I'm saying go out there and do the research. Don't limit yourself. And don't be, again, razzled and dazzled by headlines and all this kind of stuff. Learn how to sift through the bull crap. Learn how to decipher what they really say, and then go back it up with some data. Because the one thing we have to our advantage, again, and in closing, the one thing we have at our advantage is the ability to what? Go turn over these companies and go look at their filings, the data, and the numbers, and see what they really say. We don't have to deal with the conjecture or the myopic contrarian. We go pull up the data. What does the data says, right? And then how that translates into what? Get into the bag, or get into the profit, right? So again, that's why we go hard. So again, go link up with other brothers and sisters. Go link up with other people who have your interests in mind. Figure out how you can get to the bag. Figure out how you both can get to the bag, and then devote yourself, right, much as you can under your will and your power and your time allotted to you, to make sure you kind of make sure that we always make sure that we still sharp as steel, not from the place of competition, but from the place that we always want to make sure that we provide any kind of level of data that we present for the family. It's the Again, we took it to the extreme level best that we could to make sure we're giving people what? Good information. Because in that moment, we can all benefit from it if it turns out to be correct. Because again, the bankers do it in their little team, the hedge funders do it in their little team, the little analysts from Stifer and Piper Jeffries and all these other, they do it in their little teams. The White House get together around their little cap, they do it in their little teams. Then guess what? We got to have our own too. And in that moment, we also still got to turn around and go and educate our other what? Family members and peers and friends and this, that, and the third too. Why wouldn't you? Why wouldn't you want to share this with them? Even if they pushing back against you, still say, hey, whenever you're ready, bro, whenever you're ready, family or whatever. And that's the part where, again, we can change this on our own, in our own right. We may not compete with the Morgan Stanleys and and the Goldman Sachs and all these people, but we can do what we can to make sure we do something to protect ourselves and our families. Again, like I always say, it's a marathon. It is not a sprint. It is a marathon. Warren Buffett started how old? And he had a chance to go through all this expansion and Great Depression and Industrial Age, Revolution. He went through all that. That's why again he making all the money today. Now again, in our right mind, given those terms and circumstances, we would probably be in the same breath, but it ain't too late now. The new age technology is what? AI, right? All these other machine learning algorithms and all this, reality where we gonna move into a lot of service-based commodities out there now, service-based industries where they're overpowering a lot of the, hardline manufactured stuff or product. People going to more service industries. Basically, that's what America is now. It's one big, uh, hey, it's one big melting pot of serviceable industries because a lot of the manufacturing power that America has been gone. It's rusty. It's rusty. If you don't believe me, go drive through I-75, take I-75, right? Come all through Tennessee and all that there. Go through the Rust Belt, Ohio, Michigan, and Illinois, all up and through that area. Indiana, it's rusty up there. Pennsylvania is rusty up there in a lot of areas. These factories been shut down. And I don't see nobody lined up to open up. Not now one of them. Not now one of them. And you got GM getting ready to probably try to shut down a lot of a portion of its factories. It's rusty. The gold rush been ended over there in California. Ain't no prospects over there. It's all Silicon Valley now. Who got the latest and important gadget, or so-called, in my latest and most innovative gadget to sell you now? The dot-com bubble been burst. Now it's all about, hey, this other stuff. So again, take your time, think it through thoroughly. Don't let people move you off emotion. Don't let people move you off conjecture. Don't let people move you off screaming, over talking you, trying to tell you don't know what you know. Take your time, process it. Do your own research. Do your own due diligence. Stay disciplined to the studies. Get what you need from it, and then go be an asset to somebody. Go be an asset to the information. Go be an asset to your community. Right? That's how you pay it back, or pay it forward, so to speak. That's how you change things. Dignity, integrity, right? Discipline. The rest is history. All right. The rest is history. All right. So, guys, I'm going to close out here. I enjoyed the bill. Again, I just want to kind of come on and share a little bit. Again, these are things that I see. These are some of the things that I see every day. I invest in the market just like you guys see. So, again, I'm not speaking some foreign language. So again, that's why I say, we need to keep, our foot on the ground. We need to keep our foot on the gas pedal because again, it matters, right? It matters, right? And so, we have our moment. So again, I don't even want, y'all know what it is. Y'all know what it is, right? Y'all already know what it is. Y'all know what it is, right? So let's get it. So we got some nice earnings coming up this week. I look forward to them. We got some information data. We got to get the get the unpack and bill off of this week. Y'all, again, let's get it. I look forward to it. And if I can help in any way, y'all know me. I'm approachable, right? I'm nobody. I'm just like y'all. We peers at this. Y'all already know how we peers. Ain't no guru. No, we peers, right? Y'all know my favorite saying on Bantu. I am because we are. We stand beside each other. Ain't nobody better than this. Regardless, somebody may have a little extra information to add, but that's fine. We peers at this, right? Because I know how vital it is to make sure that everybody feel like they got skin in the game. Because when that happens, everybody will go a little harder, right? Everybody goes a little harder when it's skin in the game. Right? It's easy to look back from afar and say, "Well, yeah, okay, that's fine." But when it's skin in the game, it's a whole different ball game. It's a whole new different ball game, right? And so again, I'm just saying, let's go. This is our Sunday pep talk. This is our Sunday powwow. This is our Sunday jamboree, right? And I'm pretty sure in the same time we could be disgusted by a lot of things that's happening around us because we ain't got no control of it in terms of governments and policies and this, that, third. We could be equally also excited about the opportunity that guess what? We got something to counterbalance that. We got a skill set. We got a skill set or a craft that a lot of people are afraid to even think about doing because they're comfortable punching the clock and the clock only and praying and hoping that Mr. Charlie don't come in there one day with that pink slip or coming there with his little hand on the shoulder, giving that long look. You're like, uh-oh, the day must be the day, right? They finna hit me with that, they finna hit the axe. They finna hit you down the back with the axe. and you know a lot of the things that you got tied up in terms of your cost, I mean your way of life that you kind of presented for yourself, all that finna be up in shambles in jeopardy because you put too much interest in one basket alone. You put too much interest in one little stock alone. You wasn't diversified properly. And so again, we need to make sure we try to curtail that as much as possible. So again, I appreciate you guys for stopping by, hanging out with your brother here on this little nightcap or futures market recap or the headlines. Again, if you guys want the link to the investor.com, if you don't use this site, there's many others out there. I'm pretty sure you guys have different ways that you go about, pulling up information and data to keep up with what's happening, in and around the market from relevancy value to you. But investing.com, again, is a really good one. There's others out there too. But y'all, again, go check out and see what's happening around you. Right, Reuters and CNBC, and there's many of them out there. But again, investing.com is very neutral. Investopedia, they're kind of very neutral. I like to use them a lot as well, right? And so again, you can always get some good data from these places, and just that third again, or not just open up your TD Ameritrade or whatever you use, and kind of see what news they're putting out too, yeah, within their news feeds and their data values, right? Right. And I appreciate all you guys for stopping by and hanging out with your brother too. Again, I see my family in the house. My family Mazai, my brother Wade just came in. First time. Hey, appreciate you coming by today, man. I appreciate it, man. You humbled and you guys are welcome here. You already know it. Overseas it. My family Jeremy Pollitt. My family T-Bone 21. All right. My family Mr. JRH in the house. My family Spencer Gordon. Right. The beautiful Eva, illustrious Monica Lamb in the house, who's always, rolling hard, providing data and information to kind of better the community, budget analysis, you name it. That sister goes hard. She sleeps not because she's too busy trying to build an empire and build others up. She's very selfish. All right, my family CG3, right? Who else we got in the house? A lot of people. Some of you guys may not have, even typed in the back chat. I see you guys. I know y'all we family, and I know you busy, but salute to you all. My family Harry Chu, right? My family Fireboy 1614, right? The family, brother over Sunline 55 in the house. My family going hard, right? The crew, right? My family, Mark William, right? Who else we got in the house? Sister Shirley Lewis in the house. My family, Miss Shirley, right? Power and profit to you, sister, as always, right? You know you family in the house, right? This Shan in the house, all right? My family, Josh in the house, Josh Kaufman. I mean, my family, Dave B in the house. Y'all, all you guys, man. Again, salute to you all, man. Power and profit and females, not calling a woman a man. Y'all get what I'm saying? My brother, Sniper, I'm in the house, right? My family, Sadir Halliburton in the house. Overgoing everybody that's paying attention that who catch, came in and devoted a little bit of your time to be with your brother tonight. I appreciate you all, and I'm humble and I'm ever eternally grateful for it because I do realize the power of a think tank, right? I do realize the power of people coming together under the community diversity of knowledge and expansion of getting better at learning how to better ourselves, right? And we just happen to use the stock market, right? Or some value of investment, right? Real estate, y'all name it. Again, we understand that financial freedom is also it entails the mindset of the entrepreneur, right? Financial literacy or financial freedom is obviously relegated to the value of the entrepreneur, the person who's willing to do something that nobody else is willing to do. That person. By that very proxy and that definition, each and every one of you guys are entrepreneurs in your own right. Whether people give you credit for it or not, because I guarantee a lot of people out there are scared to even think about what we do. They don't have the stomach for what we do. They don't have the nerves or the emotional composure to do what we do. And yet they don't realize if days that you may show up, with a crazy big bag, you're like, well, how you do that? Or you hit a trade like, the trade I hit Thursday with Stamp, right? Stamp.com, right? With those contracts, 20 cents, 20 cents for the 55 strike price puts ended on June the 10th, right? Turned into basically 1580 a contract. $20 turned into basically $1,600. $20. Now you show me anywhere else out there you can get those kind of returns on that kind of value of an investment. If you want to call it investment or a trade, however, find me something else out there and ain't no middleman in between that's gonna pinch off your money. Find me somebody else, another scenario out there like that, guys. Where $20 can turn into $1,600 off one trade. And all you did was set it and forget it and walk away and waited for the next day to happen or waited for the news to kind of unfold. I'm just saying. To me, this stuff is a no-brainer, but that's just me. Maybe I'm the crazy one. $100 turned into 8,000. 5 contracts at 20 cents a piece, basically $20 a piece, turned into $8,000. Basically $700-800. Y'all know how we do this stuff in the market. $100. Again, we know that that always happen, but we are in a position where if it happens, we get to capitalize on it regardless, and we ain't got to wait on nobody. We don't have to wait on nobody. That's what I'm saying. That's the point I'm really urging here. Again, the money come and goes. We get it. It's about the consistency and being in a position to be able to do it. That's the part I'm talking about. Right? This is why we go hard. Right? And this is why we need to have more discussions like this. Whether you get it from me, whether you go to another channel, I don't care where you get it from. As long as we're having these kind of discussions, that's all I care about. Because I know in that moment, hey, we're building. We're building on our craft. And so when we do come together in collective environments or hangouts, hey, steel sharp steel. The brother dropping some data, the sister dropping some data. Oh, I can roll with that because I can go research it real quick. I'm like, yeah, they on their game. This is good. Let's see if we can probably take this trade. Let's see if this can work out for us. That's what it's all about, right? So again, I leave you guys in goodwill and peace and prosperity and profit. Y'all know my saying, power and profit. And I know y'all guys are fired up and ready to get after this market tomorrow. Right? I know y'all are fired up and ready to get after this opportunity because again, we realize it now that in these moments, we're going to be ready. We're going to be ready for anything that happens around us. We're going to be prepared. Right? And that's what it should be about. It's a marathon again, and it's not a sprint. Just let that marinate, own that, and then let's get it. All right, guys. So again, power and profit, you guys. Again, I appreciate you all. My family, Lennox John came through a little last in the house. My family, Nisio in the house, Nisio in the house. I see you, family. Power and profit to you guys. Right. I appreciate you guys all. Right. And I'll see you guys in the Discord rooms or in the back chats or the Twitter, the stocks, wherever we all came together at. I'll see you guys back in those places, respective places. Until then, guys. Power and profit salute to you all. Power and profit, guys.